All right, let me know if you can hear me now. Hold on.
There we go. Yeah, you hear us, right?
Yeah, I can hear you. Can you hear me?
Yeah. You know, they was trying to act crazy on us.
I was like, what is going on?
Nah, it's a glorious Monday, man. Nothing can stop us. You know that.
Perfect.
It's glorious. Like I said, last Monday of the month, you was about to get into some things. It's a good thing we stopped you.
Such as?
Can you hear us now?
Yeah, I can hear you now.
Yeah.
What's going on, man? How's everything?
Good, man. How you feeling?
Everything's good, man. You know, can't complain. It's moving and grooving, man. Making the best out of it. I was saying, you know, it's a rainy day in New York, but April showers bring May flowers. That's what they say. So hopefully, you know, we'll be headed into the spring season pretty soon. But it's a good week. We're gonna talk about everything that we got going on this week. But shout out to Toronto, Canada.
Yeah.
Headed up there. Second show on the Market Mondays World Tour, presented by Ally.
Yes.
And this one is special for a few different reasons. Toronto, of course, great city. Canada, great country. But we're gonna have 19 Keys with us for this one.
Shout out to Keys, man. He just came off a spectacular event out in Oakland, man. That was pretty dope.
Absolutely.
I stayed up past my bedtime to tune into that, man. Shout out to him. Shout out to Dame. It was definitely a high level solution, high level solutions rather than problems. High level solutions, man. Shout out to our brother Keys, man, for putting on something special for his hometown, man. It's always good when you can feel the love when you're at home, man. And from the way it looked and just being present inside of that live stream, you can feel it, man. So shout out to him.
Yeah,
that thing was packed, man. I told him I was proud of him to see him pull it off, and I know it was a dream for him. Kudos to y'all for facilitating. Obviously, Ashley did an amazing job. Ashley, I'm gonna text you after we get off here. I got you. Me and Ashley have come to an arrangement of a piece from 2023 to 2033. So yeah, shout out to her. But no, yeah, I see she did an amazing job. But shout out to Keys and Dame. I'm proud of you, man. That's amazing.
Nah, it's all love, man. So I'm gonna just run through this real quick because I know we got a lot to talk about. We got my guy Caleb. He's gonna be on it in a little bit. But yeah, the time has come. Toronto, Canada. We will be up there this week. We have a show on Sunday and a show on Monday. Both shows are sold out.
Yes.
Repeat. Sold out.
Yeah, both shows are sold out. But you know, we appreciate the love. We're gonna be trying to make as much rounds as possible. You know, visit small businesses. You know, whenever we go to the city, we try to tap in with different people. So if you have any suggestions, if you're a small business owner, if you want to link us with different, you know, real estate investors in the city that's doing it on a high level, different investors, you know, it's not like we're not planning on coming back. God willing, this will be, you know, one of many trips to come.
Yeah.
And this will just be the beginning of laying the groundwork. So we appreciate you guys so much for selling out these shows in such a short period of time. We look forward to seeing everybody. And yeah, man.
The amount of love might warrant us to come back. I mean, it's overwhelming. That's happened with Oakland. We went out there to do a networking event, and the love was so overwhelming, so outpouring that we said, you know what, we got to come back and do another event here. So who knows what the future has for Toronto?
Who knows what the future has for Toronto? But
the question that everyone wants to know, not to cut you off the show, what time is the Drake interview? Stop playing with the people.
The boy. The boy.
What time can they pull up and get the
light?
Drake?
It's
the boy.
One and the boy.
The boy.
Gotta put it out there.
You never know what can happen, man. You know, hey, you never know. So Toronto is sold out 2 shows back to back. That's the first time that's ever happened in financial literacy history. Let's just be clear. Just to be clear about this situation.
In case they were confused.
But the next show, tickets are on sale now. They actually just went on sale about an hour ago. London.
What country?
London, June 23rd.
June 18th.
June 18th.
June 18th.
June 18th. We will be in London. What's the venue?
I'm gonna tell you right now,
we
brother.
will be in London. And y'all know how we do in London.
Peacock Theater.
Peacock Theater, London. All my London, all my UK family. Get your tickets now.
All my Naja family, all everybody from the Africa, everybody that's from Ghana, everybody that's from Nigeria, that's in London, any part of Africa, and you in London on study, y'all need to be there. Y'all know what it's like when we touch the town, man. It's something special. We get to feel the vibes from the people. We get the energy from the people, and we pour everything back into the people. So make sure y'all show up. Go get your tickets right now. The waiting list, you have been informed. It was a long waiting list, right? So you've been informed. Now the general public has been informed. Y'all don't want to miss anything that Earn Your Leisure Market Mondays, Ian Dunlap, the master investor himself, has to put together, because it's going to be something special, and you never know what piece of information is going to be the piece that changes your life. So catch all the information. So make sure y'all there.
All right. So yeah, so we pinned the link. London, get your tickets.
Yeah,
That's June 18th. That's the next stop on the Market Mondays World Tour.
Cannot wait.
We cooking up. We got a lot of surprises throughout this whole epic run. Thank you to the New York City 500 Black Men for honoring me and Troy.
That was crazy.
This past weekend. We'll talk about it later on,
That
but
was crazy.
had a great conversation with the mayor of New York City, and had a great conversation with our friend Don Peebles, and had a great conversation with our friend Jim Jones.
Welcome, Jimmy.
Yeah. Emily Gilbert. Also.
Yes, Emily Gilbert. Yeah.
Ramadan Mubarak to everybody that is observing Ramadan. That's the holy month for all Muslims around the world. That just started a few days ago. So that is not an easy feat to fast all day, but there's blessings involved with that. So definitely that's important. I just want to make sure I'm getting everything out there. Houston, Texas. Looks like you're in Mexico right now, Ian. But Houston, Texas, we will be in the building tomorrow. We are going to the McDonald's All-American game.
I'll be back tomorrow.
Are you back?
I'll be back tomorrow.
Oh, perfect.
Yeah.
McDonald's
Right on
All-American.
time.
We got a link. I'm excited to see DeJuan Wagner's son, and I'm excited to see Ronnie James. That's gonna be a vibe.
Yeah.
You're gonna be able to see us for sure.
I don't want to take up too much time.
Yeah.
So, and tomorrow, this is the last day. Tomorrow, big episode for Earn Your
I'm
Leisure.
looking forward to that.
Our South by Southwest panel with La Russell, Jadakiss, and Ryan Leslie will be dropping as an episode. That is just a fun bunch of people to put together. And that was a dope conversation to have. So I'm excited for everybody else to enjoy that. So that's tomorrow, 8:00. Earn Your Leisure.
Yeah.
Shout out to all of those guys.
Yeah, and shout out to everybody that tuned into last week's episode with Tabitha Brown. We got a lot of love from that, a lot of outpouring, support behind that. Yeah, man, my brother texted me, he said, yo, this is one of the best ones I've ever seen, just because of the chemistry that was there. And that was just all natural, man. Like I said, when she walked in the room, you could feel the energy, you could feel the joy over her presence, man. So it was dope. So shout out to everybody that's been encouraging, because this vegan journey is real.
How's it going for you?
It's going pretty well, man. It's going pretty well. Like I said, my wife, whatever she cooks, I'm gonna eat, and she's been chefing up. So I've been pretty fortunate, man. So shout out to everybody that has been encouraging me during this journey. Thank you.
Ian, they said you got like a speaker. You got like a speaker on your microphone.
A speaker on my microphone.
It's like, you hear that?
Yeah.
It's like
is the mic on? Check if it's the mic or if it's your computer. Yeah, go to your audio settings real quick.
You want to say the disclaimer while he's doing that?
Yeah, let's do that. Let's do
Yeah.
that.
Let me know if it's better now.
All right. Because it sounds a little bit the same. All right. So you know how this works, man. Do your own research. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Please do your own research. When the research is great, share it. And if you found research from somebody else and it was great, please let them get the credit. Love is love. That's how we build community, y'all.
All right.
This message is brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor himself. Thank you.
Ian, anything you want to say? Ian is muted.
Ian you are now muted, my brother.
You are muted. Yes, he is.
Yes.
Yep. Still muted.
What about now?
Oh, now you good, bro.
You're good now.
They don't want us to be great, right?
Yeah, you sound better too.
Yeah,
you sound better.
Now you sound real good.
All right, no Stock Club call tomorrow because I'll be getting ready for the Toronto show, and I may be at the All-American game because we have to brainstorm. But we will be back next week.
It's a business trip.
Yes, research. No, he did hit me like, bro, you need to get back Tuesday. I'm like,
I did. I got
Yeah, but the Toronto show would be amazing. Get your tickets to London. I appreciate you guys so much. Let's have an amazing show. Let's get Caleb on. Let's answer some questions. Let's talk about Square.
Let's do it.
Yeah.
And shout out to Sav too. She's the one that actually got us those tickets. She hit me, so appreciate it. Thank you. You know, we're big sports fans. So let's get into this. What are three major tiers of financial security that everyone needs to strive for? What are three tiers?
This post went viral, and every time I post it, it usually does. But the first level of security that you want to get to is $100,000 invested in the market. Now, I've always said that you won't feel safe until you get to a minimum $100,000 to $600,000 invested. I know that number scares some people, but our job on the show is to tell you the truth, even if it's a scary thing to hear. 100,000. Here's a quick exercise. Multiply what your bills are now times the next 5 years, and let me know how much money in chat you would need if a disaster happens to not work for the next 5 years. So 100,000 is level one. From the people that I've talked to that are doing really well, the second tier that you want to get to is like a level of like financial peace. That's the $10 million mark. So I know some people are like, hey, I don't have it. I don't know how I'm going to get there, but one thing I would like to do maybe at the London and Chicago shows is to build out a blueprint for how to get you guys to maybe 5 million to 10 million. Trading has considerable risk. Just because we give you a plan, it does not mean that it's a guaranteed way to do so. Please clip this up. Mike, please put the disclaimer at the bottom. And then that third tier, I've said this before, the number of true wealth, true freedom is $28 million to $30 million. So I know there's a lot of conversation around how much money is needed. And I know I even get some pushback every time I make this post, but imagine if for the next 5 years, we have inflation run like this for the next 5 years, 100,000 isn't what it used to be even 10 years ago, let alone 25. And yes, it's scary to hear these numbers. I'm not doing it as number porn or fear porn, but I have to give you the real number. So write this down, 100,000, 10 million is the second tier. 28 to 30 is like the final tier where you can take care of you, your family, others. And if you don't think this is true, why do you think all these artists are selling their catalogs at these rates for this kind of money? Athletes are signing the contracts that they are signing for. Some Supermax deals are now 300 million. If 20 million or 5 million was enough, they will sell it there. It's not. And what can we do to help you to get to the $100,000 mark faster if you're not there? So I know this post always gets a lot of pushback. This conversation gets a lot of pushback, but these are the real numbers that need to be hit to take care of your family. Yes, I'm sure you can go in Idaho somewhere and live off whatever amount of money per year. But if you live in New York, Texas, everyone from California is moving to Texas, Jersey, Florida, it's really tough to get by. I saw the report. You guys even posted it. Like 100 grand feels like what, 32,000 in New York City?
Yeah,
36.
100,000 is equivalent to 36,000 in New York City. That's where it goes the lowest, and where it stretches the highest is Memphis, Tennessee, and it's equivalent to $86,000. And that was taken into local taxes, local inflation, transportation, housing is the biggest expense, and they see how much of 100,000 is really equal to as far as your buying power and spending power.
It's interesting. You wrote those numbers in the post. I kind of took the question and kind of flipped it, like from a practical standpoint. Like I did the levels in terms of like things that people can practically have outside of numbers, right? So I broke it down into financial stability being a level, like that's a tier, right? Having and being confident enough with your financial situation, having enough money to pay your bills, having little to no debt, and then having liquid assets, right? So that's a tier, right? People can obtain that type of tier. And then having 6 months saved. I added that because I know Shadi always says that. He always says, you want to have at least 6 months, if not optimally 12 months saved.
Yeah, I think we need 12 given what they're doing with inflation.
So that's financial stability. I think another tier is financial security, and that's having investments and assets generate passive income enough to cover your basic expenses, right? And so you go from stability and now you have security. I think another tier, and these are like, again, practical ways, is financial freedom, right? And most people are like, oh, that's the goal I want to get to. And so I kind of defined it like having enough passive and residual. So passive meaning that you have money coming in, and residual meaning coming continuously coming in to cover living expenses so that you can spend time doing the things that you want to do and love doing rather than doing things to make money, right? And so there's three tiers there. There's financial stability, there's financial security, and then there's financial freedom. And then the last piece, and a shout out to my brother Ash Cass, is financial abundance, right? And most people, that's like having enough.
That's
now,
the goal.
having all of those things, but also having the philanthropic part of it. Now you've accumulated from residual and passive, and now you have actual money to now give back to others. And so like when we look at it in tiers, and it's interesting, like, because I saw the post that you put up, I was like, yo, let's attack it a little differently. It's like from a practical standpoint, like, how long will it take for me to get to this tier, right? I made it to this tier. How do I get here? How do I get here? Rather than putting a number to it, because I feel like they're like, well, how am I gonna get to 100,000? Well, let's figure out, because it doesn't even matter the amount. It's like, are you in this tier? Like, are you financially stable right now? Some people might be, right? They may make 100,000. It's like, yeah, I'm financially stable because I have enough to make my living expenses. So that was just, it's interesting. You went that way. I just went another route for other people too.
I take it you were a teacher in the past life, right? And I want to say this too for the entrepreneurs: the dangerous tier to be in is like that 500,000 to $1 million space, because you have cushion, but you don't have enough safety. Like 2 bad years, 2 bad product cycles, 1 PR disaster, you can be knocked down really fast. So I know there seems to be like exponential leaps and bounds in those tiers, but there's a reason why. Even like for 20 years, it was like, hey, 3 to 6 months savings was okay. And then COVID through now hit. And now I know some people that have been living off of savings or supplementing savings for 2 years. You probably need 5 or 6 times the amount of money than whatever baseline number they normally give you.
And also, put a post up today that got a lot of traction as far as the U.S. medium income level. The source is the U.S. Census Bureau. So don't argue with me. Argue with the Census
Pretty
Bureau.
good source.
But all households together, 70,000. Married households, 106,000. That's interesting. A healthy marriage is a wealth hack. Obviously, for obvious reasons, right? But 2 incomes, it's not only beneficial, it's beneficial financially. We can have a different conversation about that. But 20 to 24, 51,000, 25 to 34, 74,000, 35 to 44, 90,000, 45 to 54, 97,000, 54 to 64, 75,000, 65 and up, 47,000. So this is interesting to me on a few different levels. The highest earning potential that you have is from 45 to 54. That's interesting because most people that tune in and watch us and consume our content is between 24 and 44. So you haven't even reached your full potential yet.
Your peak yet. Yeah.
That's encouraging. But also you see how it goes up and it comes back down. By 65, people making 47,000, obviously, because they're retired and they're just living off of there. So you have to figure out a way to continue to make money, even because 65 not really that old these days. So it's like you don't want to be, just relying off of your kids to take care of you when you become 65 years old. It also speaks to the income inequality from Black and white people, because a lot of people, like in the comments, they were surprised at these numbers, and it seems like a lot of money to a lot of different people. But that's because most people hang around people similar to themselves. So you don't even realize the wealth gap. And I realized that when I was a financial advisor, because I used to, be around so many different people, and they're like, yeah, my client, they're like, just have somebody just invest $100,000. And I'm thinking in my brain, I don't even know anybody that has $100,000.
Yeah, they say like it's $1,000.
Yeah, but it was so common. But it's so common in a lot of different areas from a lot of different people, right? But it's like most people hang around people similar to themselves. So you hang around people similar to yourselves, you don't realize that 2 miles down the road, those houses are 5 times more than your house, or those people have $2 million in your retirement account and you have nothing. So it's kind of hard to really even appreciate it if you're not fully exposed to what other people are experiencing. So it's a very, involved conversation, but it's interesting to see what people gauge as wealth, what people gauge as success, what people look at as far as, having an income that they can live off of as opposed to other people. So these are important conversations to have because exposure, very important.
Absolutely. And if you're not there yet, I would definitely advise you put in chat a business idea that you have that will allow you to get to that number. We all have built businesses to get there, then invested the capital from the business into public equities and stocks. If you're not there yet, you almost are at an advantage because you have a dream. You have the ability to dream to get there faster. Put in the comments what are some businesses that you can start if you're not there yet to help you get there by next year.
Hit the like button and share.
Please.
Yes,
We are headed into a very important segment, something that people have been asking about for a very long period of time.
Yes.
We don't run from anything at Market Mondays.
My brother said don't run from the smoke.
Yeah.
Go get this work. You gonna get this.
This is what everybody wants to hear. So hit the like button and share. I'm gonna let it.
Shawty, tell him let's get to 7,000.
Are we not talking again?
I'm gonna let the beat build. Jay-Z, great album.
Amazing.
20th anniversary of Diplomatic Immunity.
Yeah, I listen to this album every day.
We are getting old, yo.
In 97, this is what I had, the 5 CD changer that kept spinning. I only
Yeah,
had 2
yeah.
CDs. I had that and Baduism. They came out the same year. I just played those every morning.
That's fire.
Shout out to Hope. Shout out to Erykah Badu.
Shout out to Uncasa.
Uncasa. That's one of the hardest intros. That's
Man,
one of the hardest
went
intros.
crazy.
Where are they now?
He went crazy. All right. So Ian is he's mostly always right. When it comes to, he has a tremendous track record, of picking stocks and price point and the Bitcoin.
Most consistent realist stories and my interviews are hotter.
Yes.
All the above.
Yes.
But even the mighty fall. Boy.
Oh man, but there has been one elephant in the room. So all right.
Can't run from the pain, run toward it.
At one point.
Yo, anybody who don't like me, come close us up. Just for you.
Remember when he said
we got
so at one point in time, you was very bullish on Square.
Yes.
And that hasn't worked out.
You don't got to be around the bush.
No, you know what, Ian? We're gonna keep this. It hasn't been as fruitful as we had expected.
Yeah.
So, Ian, in true DOA fashion,
yes.
Is it now time to? Is it time to bring?
And what happened? What
Square to the pulpit?
They changed their name to Block. What? All right. What actually happened? What happened?
It was a couple things. So before I make my full announcement, so Hindenburg put out a research report. They said that they believe that Square or Block is involved in fraud. So I think that's a gross exaggeration, but there are a lot of things that Square or Block could do better. Number two, I think it's fair to say that Jack is a tier 2 CEO. He's like, please don't get upset when I say this, shout out to your family, but he's more of like a Paul George than a Kawhi or LeBron. Amazing CEO, but not in the greatest list of all time. Even if you see how he ran Twitter, Jack is a very hippie-like CEO where he wants everyone to be able to get along, open access. He doesn't want people to have to identify who is on a platform, so that can lead to fraud. So they're saying with Cash App, it has become a tool for money laundering and nefarious activities through the app. And as a result, Hindenburg put out this report. They've underperformed maybe for the last, 12 or 13 months. There's a couple things they could have done. The change in interest rates is one of the things that hurt them the most as a result, because even in PayPal in 1999, when the market went through a squeeze in 2000, 2001, when interest rates then adjusted as well, PayPal received the brunt of that. So if you're in a credit card business or a finance business, and you're really arbitraging a low interest rate environment, or you're not prepared for when the interest rate goes up, it's going to have a tremendous impact on your business. So at one point, I did say Square is a new JP Morgan. I had 2 people from JP Morgan call me today. Say, hey, my boy, you gonna reel that back yet? Because we told you when you said it, you were stupid. You know
We need Mr.
These
Dunlap
are-
to the front of the congregation.
So I will say Square is not the JP. I will say this before I make my declaration of death. The United States and the banking system at one time we'll talk about the CEO of Binance being sued by CFTC. Like anything Bitcoin or crypto related at this time is being attacked. But I will say this on the record. I was wrong about Square. It was mistimed. I was right about it, the purpose of it and when it should go up, but I was wrong about the price. So I won't say Square is dead. It is in critical condition. This report does not help at all. So
Yeah.
if I lost you money, my apologies. This is my like John Jones disqualification. But no, I think there's a couple things. Also, too, when this one drug down, I'll be very honest, this is like the canary in the coal mine that led me also to see like when it drew down past 25% that we possibly could head into a recession. Because the A players never lead into signal the recession. Like even the Foot Locker thing, Foot Locker closed the 400 stores. For me in 2019, when Toys R Us closed a bunch of stores, I want to see if the weaker players are able to sustain an environment. So when Square drew down, I was like, oh shit, this could turn the tide. But no, I was wrong about this one. My undefeated streak has come to an end, but I'm still like 99.9%. So, but it's really important to also, if I'm going to wave the flag of being right, and like Joe said, yeah, everybody put a hand up and you're going to get a hell yeah if you made your money. I got to also say, hey man, I get this right. I was wrong. So.
Yeah.
We-
Well,
yeah,
happens. I
yeah.
mean, so this is well, I appreciate that because it takes a lot to admit that. But it goes back to risk mitigation.
Yes.
And this is why we say do your own research at the beginning of the show.
Yeah, and time out too. This shouldn't have been the first 6 that anybody picked anyway. I'm not caping for me, but I always said VO, VTI.
Oh yeah, for
Apple,
sure.
Microsoft.
Yeah, and that's why even me, I always say like I'm not really even a big fan of just individual stocks, period, because there's a lot of risk attached to anything. It's like this is why ETFs and index funds have always been, better. But you have options to invest in whatever you want to invest in. But I mean, no, you are responsible for any investment that you make.
This is true.
So
absolutely.
that's important.
Investing has considerable risk.
Well, it always has risk. There's never going to be a time where you make 100% of return on every single investment that you do.
Yeah.
Even me, I've lost a lot of money in investing. Don't cry about it. You got to take responsibility. It's my fault.
Yeah.
Do better next time.
Yeah.
It happens.
What did you learn from it? I mean, I think that's always been the case. It's like, all right, well, what did I do? What was a mistake? And like what Ian just did was like, that's accountability, right? Like it wasn't like, oh, I just lost this money and now whatever. No, these are the reasons why I may have miscalculated this, right? So when you go into the next investment, you're wiser for it. But it's like Shadi said, I think you both nailed it. Like it's risk mitigation, right? If we start seeing it pull down, do we have a stop loss? Did we put one in place? Right.
Yeah.
So like these are the things that we gotta, take into account and actually implement in some of our planning. And you'll know if you didn't this time, you'll know for sure the next time.
Yeah.
So
20% drawdown for sure.
Yeah.
So it's over.
Max.
So it's really over.
Well, it's been trading like sideways, kind of.
It's been moving sideways. Like it's going to be one of those ones in maybe 3 or 4 years. It'll make a hell of a comeback, and people will be like, "Okay, this one came from the graveyard and resurrected." So I don't think that it's there, but it's also. I would say the biggest mistake that I may have made with this one, they for sure were not what people in the mortgage business will call A paper. Like it wasn't prime top 25. For sure, it was more of like a B tier that could have done incredibly well. And they had a lot of things going for them, but once those interest rates changed, for sure. And then also too, like you don't hear a lot of positive things about management overall. Like I know I'll talk about it, but on the fundamental side, like Trap will talk about it a lot. Like the class of management that you have in a company. Like if I ask the average person who are the other 4 people that have a collective hand and running block, they couldn't name anyone. That's usually not a good sign. I think the Hindenburg report may be a bit of a reach. I think Square was up 5% or 6% today. But it's been trading sideways for a minute.
Yeah.
It's been trading sideways for a minute. So
Can you hear us? Somebody said that the mic is a little low on our end.
Yeah.
you
Is
guys
your
sound
mic-
great to me.
It's good.
Yeah. As long as my mic don't sound low when I take accountability, then you know.
Look, you're still doing better than a lot of pundits.
Hey, yeah.
Happens,
A
man.
lot of them pundits on trade. Yeah, players mess up too.
It's part of the game. It's part of the
Yeah.
game.
Yep.
Part of the game.
Yeah, shout out to Paul George. man.
Even Jordan missed some shots every now and then.
It's about the one you make. About
Yep.
the ones
That's
you make.
true. Yeah.
It's a fact.
Yeah, it's a fact.
The key is to make more money than you lose in investing.
Yes,
gonna
risking
lose-
it. Yeah.
You're gonna lose money investing, but if you make more money than you lose, then you'll be positive. You don't want to
Yeah.
lose more money than you make. That's when you're in trouble.
Want to risk going to make 11. If you guys have not read the book, please write this down. Unknown Market Wizards. I was reading it earlier, even though I read the book. You know, sometimes you'll read something at different points in time, it'll stick out to you. Some of those setups those guys are taking in that book are like 1 to 15, 1 to 20. It's really hard to miss 15, 16 shots in a row. So anytime if you're buying an investment at the bottom of a market, you can put your exit at 5x from the previous all-time high. So if the stock is at 100, you can have a predetermined exit of $500. And then that way you can like guarantee what your multiple upside is going to be. But Unknown Market Wizards is an amazing book that everyone needs to go through.
Let's bring on our friend,
Friend of the show.
Caleb
Yes.
Silver.
Caleb has been with us for numerous events.
Yeah.
He appeared
Yes.
in London with us. He's been a Market Mondays contributor. Just a brilliant resource with a brilliant
Yes.
platform.
Caleb,
Called Investopedia. Caleb, what's going on, my brother?
how are you?
How are
Wrapping
you?
out, Brandon out. I'm hydrating here with my
Look at
UIL
that bottle, man. Like, come
Yeah.
on.
Go.
every damn day, every day. Got my towel here just in case.
Oh,
it
put
gets
it
a
up, put it
little
up
hot in
loud
here.
and clear.
Hey,
Invest.
Searching out.
Okay.
Just tried to get me a sweatshirt with the promo code, but all sold out. You guys are just burning it up. So good to be with you guys. Thanks for having me.
Appreciate it.
Always a
appreciate
pleasure,
it.
my brother.
Caleb Silver, the chief and editor of Investopedia, my favorite site when it comes to research for different topics related to investing. I've told this story a variety of different times, but I used to use the site before I even knew who he was. When I was a financial advisor, I used to look this site up whenever I had a question about self-directed IRAs or 529 plans or anything. It's a great resource. So needless to say, he's a very intelligent guy, articulates himself very well when it comes to
Absolutely.
explaining investing in the economic environment. So thought it would be a great time to bring you back because there's so much stuff to talk about, from the banking to crypto to stocks to everything. So I'm sure we're going to have a very enlightened conversation. So first and
Yes.
foremost, thank you for joining us. Appreciate it.
Thank you guys. I'm so honored to be here. You guys are doing so much for financial literacy, education, bringing people together. I love being at your events and joining you here. And your fan base is terrific. Some of the smartest people out there on the internet following you guys and commenting in. I love it.
Thank you. Thank you.
The
Thank
man
you,
of the
man.
people.
So let's start here. We talked about this before, but let's go over it. Okay. Who's really protecting your money, right? The FDIC. What is that even really? Like, what is that? And then it's like the limit is 250. There's been talks that they could potentially raise the limit higher. What about the limits for investing? That's through SIPC.
Mhm.
Is that the same? Will that be raised? Can you just kind of make sense of the protection aspect of it from an investing and banking side?
Yeah, and we're getting this question every single day on Investopedia, as you can imagine, because people are really worried about their money. Yeah, they're worried about their money in the market, but they're worried about their money, right? Their bags of cash in the bank that's supposed to be safe. So most banks are insured by what we call the FDIC, Federal Deposit Insurance Corporation. This was formed after the Great Depression, after the big bank runs of the 1930s, to protect investors, or savers, I should say, customers. And they've raised the limit over time because we've had more money to put in the bank. And that limit is $250,000. And that is per individual. If you're married and have a joint account, $500,000. That is your money in the bank that is insured. If your bank goes out of business, you're going to get that money back within a few days once the FDIC takes over that bank, right? Now, with Silicon Valley Bank and with Signature Bank, the two banks that failed. The FDIC, the Treasury, and the Federal Reserve decided to take extraordinary measures and consider them systemically important banks, and they raised the deposit insurance to make it unlimited for all depositors. So if you had money in those banks were taken over, you're getting all of your money back one way or the other. Have they made that blanket raise for all banks? Absolutely not. Can they? Not exactly, and I'll explain why in a second, but that's the FDIC. That is its own branch of the government. It has funds, an insurance fund that it pays out people whose bank goes under, that banks can been contributing to for years. I think there's over $100 billion in that account right now, but they can always take in more. So that's on the banking side. On the investing side, if you have a brokerage account, pick your broker, I don't care which, and your broker gets taken over or goes under or gets seized by a regulator, it's the SIPC that guarantees your money, $250,000 per individual, $500,000 per couple. That doesn't mean they protect you against making bad investments. That doesn't mean they protect you against taking bad advice. That doesn't mean they protect you against buying products that go under. That means they protect you if your broker goes under. So it's very important that you understand the distinction between those two agencies and what they protect.
So we saw the collapse of some banks, right? We saw Signature, SVB. A lot of us remember 2008 and are getting worried, right? So can you explain the difference between what happened in 2008 and what we're seeing now with some of the regional banks? I know they had a rebound today, and we'll get into that a little bit later, but the difference between the two scenarios in 2008 and now in 2023, what's happening?
Yeah. So in 2007, 2008, banks were over leveraged. They had bought too many mortgage-backed securities. They assumed, like a lot of people did, that the housing market in the United States was just going to keep rolling and keep going higher and higher. And they gave credit out, a lot of lenders, to people that weren't worthy of getting that credit. So when the economy hit the skids and we started to go into a recession, people were getting foreclosed on their homes. They realized that all these people they had loaned money to were not really of good credit, but banks had loaded up on this credit, on these mortgage-backed securities, and they started to fail as people were not able to pay their mortgages. And that was a liquidity crisis where banks all of a sudden didn't have money to pay back their depositors. They didn't have money to pay lenders. They didn't have money coming in, and they weren't lending money to each other. And some of the biggest banks out there, you were talking about mistakes you made, Ian. I'm the guy who invested in Lehman Brothers at 80, at 50, at 30, at 20, at 10, and finally at 2. I lost a lot of money, and I don't trade anymore because of that.
Can we give a comparison? At the time, Lehman was like Goldman or like
Lehman was a 110-year-old bank that was way over leveraged, and the Federal Reserve decided to just let it go. Now there's another bank called Bear Stearns that was equally as leveraged. These were multi-trillion-dollar banks. Now they engineered a sale of Bear Stearns to another bank, and that bank was that JP Morgan?
I think BSC. Was it JP? Yeah, I think it was JP.
The JP Morgan for $2 a share. So they saved that bank. So these were the biggest banks in the world that were going under and having what we call a liquidity crisis. They could not borrow money, and they were not lending money to each other. So the Federal Reserve, the Treasury, and the FDIC saw what was happening with Silicon Valley Bank, and whether they should have seen that months ago, we could talk about, but they saw the fact that they were not able to pay back their depositors, and that they deemed them, even though they're only the 16th biggest bank in the country, systemically important. If they couldn't pay anybody back and other banks wouldn't lend to them, banks wouldn't loan to each other, and we would get into a liquidity crisis like we saw in 2008. Now, the biggest difference is that after 2008, 2009, there was a lot of tough regulations put in place. The big one's the Dodd-Frank Regulation Act that made banks have to hold a certain amount of capital reserves in case their creditors or their depositors came for their money. And that, for the biggest banks, the 20 biggest banks, has to be a certain percentage of all deposits and assets on hand. So they're in much stronger shape than they used to be. Even though the Trump administration rolled back some of those laws, most of them are still in place. So the reserves these banks hold are huge right now. And there's about $17.5 trillion in US banks right now. The run we had out at Silicon Valley Bank and the little one we had at Signature Bank was not that big in comparison. There was only $180 billion in deposits. We're talking about a banking system that's almost $18 trillion.
Bro asked a good question about what are the differences that you saw between 2008 and 2023. But what similarities do you see, like, in the mismanagement of risk profiles from mortgage-backed securities in 2008 and like the venture capital, debt bubble, and banking? What parallels do you see like we're making the same mistakes in this cycle?
Great question. So we always say the Federal Reserve raises interest rate until something breaks. Well, something broke. That was the balance sheets of a lot of banks, a lot of regional banks. Why? What do regional banks do with your money? What do banks in general do with our money? They loan it out to one another, but they keep a lot of those deposits in government-backed securities, U.S. Treasuries and mortgage-backed securities. Why? Those are supposedly the safest investments on planet Earth, maybe in the whole solar system, because the US government, even though it has an enormous debt, usually pays off its debt little by little. So they're safe. But when the Federal Reserve raised interest rates like it did for the past 13 months, aggressively, north of 5% here, then something breaks, and that is usually the value of those bonds. As those interest rates went up, yields went up, bond prices plummeted. So the value of the assets in those banks that were held against deposits, when they mark to market them, and that means if they say, if we had to sell those today, what would those be worth? They were not worth enough to cover the depositor. So now one of the big differences is banks have to have enough reserves to be able to, even if they have mark-to-market losses, to cover their depositors. That's one big thing. But those rising interest rates, they cause a lot of bank failures. That happened way back in the 70s with Continental Bank. The Federal Reserve raised interest rates aggressively in the 80s under Paul Volcker, the tallest Fed chairman out there, to break inflation, which was 12%. And guess what? Orange County, California, the whole county failed. The whole county went bankrupt. One of the richest counties in the world went bankrupt. So you raise rates again really aggressively in the past year. We've lost 2 banks so far. We may lose another.
Okay, this is the question that everybody wants to know. Hit the like button and share.
Don't ask it, Shadi.
Ladies and gentlemen.
You wait till they do it, Shadi. Don't ask
We need to
another
get this
question.
halfway up to 6,000 views before we ask this question. Drum roll, please.
Yeah.
So, there's been a lot of fear. A lot of people are scared. So people want to know how to keep their money safe, right? So what should you look for to know if a bank is healthy?
Great question. So first of all, look for that FDIC seal on the door as you're walking in, because all banks have that right next to the lollipops, right? Make sure your bank is FDIC insured. Now, if you have over $250,000 in a bank account, you can diversify that to different banks. You can diversify that across products. So let's say, hypothetically, you have about 250,000, you're afraid, that's insured, but you want to diversify. You can buy other banking products. Any banking product is insured, but only up to $250,000. So you could go to 3 or 4 different banks if you want to. You could put that money in a treasury bill if you want to. Those are finally delivering some yield. Those are insured again up to $250,000. So you could diversify where you bank. You can diversify how you bank. You could keep some in straight cash, even though that is being defeated by inflation. So you have to spread it around if you want to. And then there's other insurance products you can buy on your money. But right now that limit is set, and the Treasury Secretary really waffled on this back and forth last week. First of all, saying all depositors are safe, our banking system is sound, and then under questioning by the Senate Appropriations Committee saying we can't guarantee that we can raise the deposit limit. Why can't they do that? Why can't the FDIC and the Treasury just say all depositors are guaranteed? Well, there's moral hazard there, right? We're going to be like, oh, it's going to take my money out. Banks, we're going to get bailed out. This is fine. But also Congress has to approve the FDIC raising that limit. And if you hadn't noticed, there's kind of a gridlock in Congress right now. So getting that passed and agreed to is going to smell and sound like a bailout, even though it's a protection for depositors. A lot of people are not going to vote for that if it comes up.
Yeah.
So just drill out, just to kind of further explain that. So it's like if you have a Chase bank account, right? You can have a savings account for 250,000, that's insured. You can have a checking account for 250,000, that's insured. You can have money in a money market account with Chase, $250,000, that's insured. And then you can have another account, let's say if you have a business account, or if you have, another type of, what other type of product would the bank
Any
offer?
banking product that is sold by the bank. And I'm not talking about obscure investments. I'm talking about CDs, money market
CDs.
funds.
So you
savings
can
accounts.
have a CD. So you can have a money market account, a CD, a checking account, and a savings account, 250 in each of the accounts. And that's $1 million.
250 is the cap on your insurance, but it could be any one of those products.
So 250 is only for one bank.
One bank.
So you can't have 250 in a savings account, 250 in a checking account.
Only $250,000 is insured. That's the cap on the insurance, up to $250,000. If you're married, you can have 5 if it's a joint account, but you can move you can have another account at another bank that is also insured. If you feel like you need to spread your money to 5 or 6 different banks, you guys remember the story about Giannis. He had 50 different banks.
Yeah.
Right? Because he was worried about this too. When he saw that only 250,000 insured, he had 50 banks. Now that's a little excessive and hard to control, but he is totally insured.
Yeah, Caleb, we talked about the FDIC, and obviously we brought up SVB, and the big news today was that obviously First Republic has now purchased the assets from SVB. I think they bought 72
Citizens Bank.
Citizens Bank. Yeah, they bought First Citizens. I'm sorry, they bought 72 billion of their assets for a discounted price, like something like 16 point. How does this work? Can you explain how the FTC was in place to now say this is okay for First Citizens to purchase? Because we saw their stock go up by 50% today.
Yeah, that's one bank bailing out another. And that's what you're seeing a lot of right now, because banks, they don't want to see their competitors necessarily go out of business. It's bad for business when the bank across the street goes out of business. That said, they would love to take on their depositors, but they have their depositors that they need to make whole, and they have their debt holders. A lot of these banks are either publicly traded in some cases and have debt. They offer bonds. So they have all these people they owe money to. Their shareholders who are last in line to get paid back. Their creditors and depositors. The depositors are the first to get paid back, but the second people to get paid back are the bondholders. They're holding the debt of these banks. So they gave them a discount so they could take care of their creditors and so that they could also take care of the bondholders, but it's obviously not enough to cover all the deposits. Where's the rest of that money coming from? It's going to come from the government for right now, it seems like, or they're going to bank, the First Citizens Bank is going to use the Fed's borrowing window. And a lot of banks have used this in the last couple of weeks, in the last 10 days, about over $200 billion has been borrowed to borrow that money to repay those depositors. So there's help from the government.
So the everybody that was an SVB client or customer will now, I'm assuming that those branches will now be First Citizen banks, because First Citizens is predominantly, I believe, in North Carolina. Obviously, Silicon Valley is in California, but there's 17 branches. Those at some point will now turn into First Citizens.
First Citizens Bank. That's right. You'll see a new logo on there tomorrow, probably.
Open for business.
There's a lot of money up there in Silicon Valley. So if banks want to operate there, and Silicon Valley was a 40-year-old bank. It wasn't like it just got here in the middle of the crypto era. This bank's been around, mismanaged, but it's been around for a long time. There's a lot of household money. There's a lot of company money up there, and there's a lot of foundation and pension money up there.
Speaking of crypto, Bitcoin is up a lot this year, but they can't seem to break through a key level of like 33,000. Why do you think Bitcoin has gone up so much? And why do you think it hasn't gone up more, given that one of the use cases is to mitigate risk from banking?
I love this question, and I'm fascinated watching Bitcoin. I think I looked earlier, 68% or something like that year to date. Now, it had a tremendous fall. You guys know, anything falls 35%, it's got to rise 50% to get back to par. You drop 50%, you got to rise 100%. You were talking about Square, it's going to be a long road back because of the law of numbers. But in the case of Bitcoin, there is that notion that it is digital gold and an inflation hedge. I don't know if that's so true anymore, but this whole distrust in the banking system wakes a lot of people up to the fact that they want to belong, or they want to own and be a part of a community that owns a decentralized asset, one that they can trade. Bitcoin satisfies all of those. Plus, there's a limited supply of it, as you know, guys. There's only 21.4 million Bitcoin that will ever be mined. So the supply is getting limited. So more people want to own it. When banks are on the rocks, you see this move towards Bitcoin because people are like, I don't trust normal banking institutions. I'm going into the decentralized world. But also what's fascinating about Bitcoin and other cryptocurrencies is that market trades 24/7. That is not a 9:30 to 4 o'clock market. That is not a US market. So a lot of the people that own Bitcoin aren't even in this country. And I don't think that a lot of the investors that were bailing out of stocks, buying money market funds, were also like, oh, maybe I'll buy some Bitcoin too. I think that's a lot of foreign investors, right? And it's a lot of the big holders in the whales that have held a lot of it, and that they see price points, because really the only thing you can evaluate Bitcoin on is really technical analysis and a little supply and demand and some news. But they see that, and they see like different trigger points to buy it, and they've been accumulating it. Helps the fact that the narrative around banks has been so bad, because it does push people psychologically there. But the owners of Bitcoin are worldwide, and they trade it 24/7.
If I can do one follow-up question really quick. Do you think when it's all said and done, Bitcoin will be the only crypto that is not classified as a security and everything else will be labeled as such?
That's a great question. I don't think Bitcoin will ever be labeled a security by the government. It's never going to be legal tender like they did in El
Yeah.
Salvador. That obviously doesn't work.
Yeah.
But I do see some of the other ones being labeled that way. And somebody made a comment here about the new Federal Reserve digital coin that's supposedly coming out at some point in the next couple of years.
Yeah.
So you could see a lot of those tethers, a lot of those dollar balance coins becoming recognized as currency because they will be tied to the dollar, even theoretically. But Bitcoin's its own animal, and it's been around for quite a while too. I think we're going to be talking about Bitcoin and using Bitcoin 5-10 years from now. And guys,
I agree.
Bitcoin, I mean, I talked about just this year. Put Bitcoin on a chart against any stock that's ever.
Yeah, especially for 10-15 year. Yeah.
You're talking
That's
about like a
insane.
350,000% return. And I'm not saying go buy it. I'm just saying there's a reason people are passionate around it. And a lot of it has to do with the fact that it is not in the middle of this banking crisis, but it is also this limited supply that has a use case, and you see institutions gravitating towards it. The fact that Fidelity allows you to custodian or will custodian Bitcoin for you should tell you that it's going to be around 5-10 years from now.
So if I want to ask you 4 questions at one time. So I'll get some high
Wait a second.
Wait, huh?
All right.
some high level information, going back to this banking stuff. So when we're looking at a bank, right, there's a couple of different factors that go into play in the banking system, and let's really break this down. So let's start with net interest margins.
Okay.
What's the deal with that?
All right. The one metric that's most important to banks is net interest margins. That's the difference between the money they lend out, the money they take in, and the money they lend out. That's their banking profit, so to speak. So in normal times, in any earnings season, we got earnings coming up in 2 or 3 weeks. I know Ian studies these charts like crazy. You're looking at these different key operational metrics within different sectors. Well, in banking, that's the one that counts. How much are they borrowing money for, and how much are they lending it out for, and how often are they lending it out? And the difference between what they borrow for and what they lend it out, that's their net interest margin. That drives their profits. We used to have this joke, can't really use it that much anymore, but you might as well. Bankers work a 3-6-3 schedule. They borrow at 3, they lend at 6, and they're on the golf course by 3, right? That's how a good bank's supposed to work. But with interest rates this high, they're lending out at a very high rate. Very few people are borrowing because these rates are pretty terrifying right now. It's dissuaded, it's caused demand destruction. So their net interest margins are really low. So you want to look at lending activity, but you want to look at net interest margins to see which bank is bringing the most money down to the bottom line, down to the profit area.
The next one is percent of uninsured deposits.
Right. This is a big one. Silicon Valley Bank had an enormous percent of uninsured deposits. They had a lot of money. They had a lot of customers that were over that $250,000 limit. So that could have been small businesses, that could have been startups, that could have been wealthy people in Silicon Valley, or just tech people who work in that industry that have gotten stock options over the years that have a few $100,000 or $1 million in the bank. So the higher the percentage of uninsured, what's that?
Do you know the percentage it was by chance?
I think it was like 79 or 80. That number rings in my head. But when you look at a lot of the regional banks that have been attacked by short sellers over the past week or two, what are they looking at? They're looking at the banks with the highest percentage of uninsured assets because those are the most vulnerable. And the Fed raised rates again, right? Last week, they're just making this problem worse. The higher interest rates go, the tighter those net interest margins go, and the harder it is for banks to loan. So they're getting squeezed because they have extremely high lending rates. Nobody's borrowing. The money they have protected in government bonds, the price of those assets has really gone down a lot, and they have a high percentage of uninsured assets. Perfect storm surrounding banks right now.
Credit spreads.
Credit spreads is basically that. It's really how much lending is going on. And you want to look at the credit spreads between banks. What do banks do? And what does the Federal Reserve do? It facilitates lending between banks, and it loans money to banks. It loans money to banks through what we call the discount window. And if you heard Fed Chair Powell last week and 2 weeks ago, what did the Fed do? That discount window is usually a 7-day window. I'm a bank. I'm loaning to Ian. He's got 7 days to pay me back. We're loaning him at a certain rate. He's got to pay me back plus that interest. Well, now that window is only 1 day long. So we don't have to wait 7 days to see what happens to rates. That's a 1-day borrow. So when banks get tight, And when liquidity gets tight, like we had in the great financial crisis, banks stop lending to each other. So you want to look at how much lending is going on right now and the spreads between what this bank is loaning to this bank. It's a super in detail for a lot of folks, but you're going to hear this word a lot. What are credit spreads? Credit spreads are getting blown out, right? Nobody's loaning to anybody at a reasonable rate because they're worried about that money. So when we hear this expression, they're blowing out credit spreads, that means interest rates have risen so high that banks are loaning to each other at exorbitant rates and nobody's borrowing.
So this whole, I just got one more, but this whole banking system is extremely interesting because it's like, I believe there's 12 regional Federal Reserve banks,
Reserve
right?
Bank, that's right.
And then those banks overnight, they lend money to all of the banks in their area. And then as they raise interest rates, then the banks that's borrowing money from the big guys is gonna be more expensive, which gets passed down on the credit cards and
It's all connected.
the
Auto,
car,
home, yeah,
the
mortgages,
car
everything.
loans,
All
and all
connected.
those. So it starts at the top. They're loaning money overnight to the smaller guys, and then the smaller guys are dishing out money to everyday people. So every time the interest rates get raised, that's how you are impacted in your day-to-day life.
And then inversely, the people who are depositing large amounts, they're using that money to now loan.
Okay. One last question.
The silver lining here, real quick, is that there's finally money in the bank for actual depositors. So people who are freaked out about the stock market or freaked out about this or that, you could buy a CD right now for 4 or 5%. You can buy a money market fund for 4 or 5%. So the silver lining in all of this is it's good for customers and depositors as long as our bank doesn't go under, but it's really rough between banks right now and really rough for businesses. That's why everyone's talking about a recession. Lending is going to get so tight. Nobody's going to borrow. Nobody's going to expand. They're going to start laying off people. That precipitates a recession.
A rise in credit default swaps. What is credit? And this is, by the way, ladies and gentlemen,
this is key.
This is your master's degree.
Yeah.
In
If
5
Seriously,
minutes.
yeah.
This is your,
if it sounds like an
this
encyclopedia,
is your master's degree in 5 minutes.
it's because
Yeah.
it is.
For free, by the way.
Right. Credit default swaps is basically a derivative or an options contract. It's an insurance contract. So if I believe that the Bank of Ian Dunlap is getting risky, I may buy a credit default swap from you, right? It's an insurance contract that says if his stock price goes under, if his stock price keeps going down, you're going
We
to
don't trade against each other.
on that insurance.
No, go ahead.
Sorry to use you.
No, you good. You good. Go ahead.
Sorry to use you. So it's basically, it's an insurance contract betting on the health of a bank. In some cases, it could be anything. You can buy credit default swaps on a lot of different securities, but the ones we're watching really closely right now are the credit default swaps on banks. Why? Because they're the amount and the volume of credit default swap purchases and the price of credit default swaps against some of the biggest banks in the world, like Deutsche Bank, has been rising a lot in the past few days. More and more investors are doubting their ability to either get through a recession, or they're doubting the ability, in the case of regional banks, for them to be able to survive this period of high interest rates and their depositors taking money out. So watch credit default swaps. And if you need a really good explanation, if I didn't do a good enough job, the Big Short movie, which was terrific, that really explained the financial crisis, there's a great explanation of credit default swaps in that movie. You should watch it. I'm sure the clip is on YouTube, but basically it's an insurance contract between me and another investor betting on the health of a bank in this case, but it could be any security.
That was well put. Thank you, Caleb.
Absolutely.
So we talk about the banks. Let's talk about the market and where the money is moving this year. Last year, we saw the NASDAQ take a hit, down 33% for the year. A lot of the companies we talk about and love come from the NASDAQ. Obviously, it is full of tech companies. So let's talk about where the money is moving. We've seen companies like NVIDIA have a great start to 2023. We've seen Microsoft have a pretty good start. Apple, same thing. Where's the money going this year right now?
Yeah, it's so strange. There's this barbell thing going on. It's a little offense defense going on right now. First of all, $500 billion into money market funds in just the past several months. I think 100 billion of that, guys, was last week in the middle of the bank freakout. Guess what people were doing? I'm taking money out, I'm putting it in money market funds. I'm taking money out of the stock market. If I still had it there, I'm going money market funds. 4% on a money market fund is beautiful. Boring is beautiful right now. So that's where a lot of defensive money is gone. CDs, money market funds, government bonds. You see the yields on bonds moving around a lot. That's a lot of people running for safety. Gold, actual gold bars. That's up like 6, 7, or 8% so far this year. That's a typical flight to safety trade that a lot of people do. They're freaked out about the stock market. They go to gold, they go to bonds, they go to cash. But also we mentioned Bitcoin. Now, I don't believe that's a lot of retail investors, although I buy it every few weeks, just a little bit, $50. We're not moving the market on Bitcoin. That's big whale money moving the money on Bitcoin. But why is the NASDAQ 100, right? These are the 100 biggest stocks in the NASDAQ. The ticker for that for the ETFs is QQQ. Why is that up so much this year? I think that's up something like 15, 16%, right?
Yeah.
QQQ is up 16%.
It's a lot for a quarter.
That is driven by the biggest stocks with the biggest market caps on the NASDAQ. And what are those? Apple and Microsoft, the two most widely held stocks on the planet, right? And those have become the safety trade for a lot of investors. Don't you think, Ian? A lot of people are like, I'm freaked out about everything. Let me go with these two guys that I know really well because they're really big, really well capitalized, and have a ton of cash.
Yeah, I agree 1,000%. Have you heard about Balaji's insight on Bitcoin going to $1 million? What do you think about that? And also, if I wanted to research credit default swaps, where could I actually track that stat to see if it's going up or going down on the site?
Right. Great question. So there are some research shops and newsletters that track credit default swaps every single day, but you can check on some banks that offer credit default swaps. You can look at the pricing and you could put in the ticker just like you would for a stock. And you can look at the price for what it would cost to buy a credit default swap. Individual investors can buy them. You need to be a little bit more accredited. You need to have a lot of money to actually do something. And you actually need to have a lot of money to make a lot of money. So this is not for retail investors to play with. I would recommend. But you can track just by ticker what the credit default swap price is right now and when it expires, because like insurance contracts, these have a term to them. So like an option too, right? It's a derivative. It's an option. There's a term to that insurance deal. So you got to look at the pricing and you got to look at the date of expiration, and you could see where the vulnerability is. Just Deutsche Bank, I mentioned that last week. It's like the 14th biggest, or no, 21st biggest bank in the world. It's a huge bank. It's got $1.5 trillion, and it is Germany's biggest bank, and that's one of the biggest manufacturing economies in the world. That bank is fine, but the credit default swaps went up like 30% last week because people got worried about it because of Credit Suisse and because of the fact that if we go into some global recession, Germany's going to feel it. It's a really big manufacturing economy.
So somebody put in the chat, what is the 401k safe?
Up to $250,000 it is. That's insured. Again, that is if your broker goes down, if your broker gets taken over or goes into receivership with the SIPC, right? But not if you make a bad decision within your 401k. That's your problem. But your money that you have in there right now is insured up to $250,000 should your broker fail.
Is there a historical precedent set for a brokerage account, a brokerage going out of business and people losing money? Like, has that ever happened?
Yeah, have you heard about Celsius? Have you heard about FTX?
Well, I mean, like,
like a real broker? No,
a real broker, like
a chop shop, chop shops all day long. Chop shops out on Long Island all day long.
Like the Wolf of Wall Street?
Yeah, Wolf of Wall Street type chop shops, but not
like Fidelity,
or Schwab or E-Trade. They usually get acquired. They usually don't.
Right. No, people want those accounts. And a Bear Stearns is different, right? That was a global bank that was having super liquidity problems and a huge run on the stock, and the Fed did not let it go under. They were a broker too, but they're really an investment bank. So nobody of that scale. Oh, chop shops go out of business every single day.
Caleb, you brought up gold, and so it makes me wonder: are there other commodities that we should keep our eye on in 2023? Are the ones that we should keep on our watch list?
Absolutely, chocolate. Guys, I was looking at stocks at 52-week highs just before we got on, because I like to see, as Ian knows, trends in motion sometimes stay in motion until something breaks. There are two chocolate companies that are at all-time highs, 52-week highs. Hershey and what's the other one? Mondelez, maybe, that makes chocolate as well. I was blown away by that. So chocolate, keep an eye on that. Keep an eye on sugar. Keep an eye on copper. Everybody makes a big deal about gold because it's the shiny object in the room. We call copper Dr. Copper for a reason. Copper is a great leading indicator of where the economy is going and often where the market will follow, because we use copper in all kinds of things, right? We use them in phones, we use them in manufacturing, we use them in our dental equipment. We use copper all the time. So that's a great leading indicator to watch. And I would keep an eye on lumber prices as well. You guys remember we were talking back in 2021 or 2020, lumber prices were sky high and then they crashed. watch lumber prices to see if we're going to get some sort of a rebound in the housing market.
Yeah,
That is
Hershey's at $93 in 2018. It's at $250.90 right now. I didn't mean to
Hershey's,
cut you off,
go
Troy.
figure. I don't even know.
Yeah.
no. I was saying lumber prices are great for people who are, in construction or building.
Or
new homes.
building.
Yeah, they know the price of a board right now. They could tell you right
Yeah.
now to the penny.
If I'm watching the show and I'm terrified, I'm seeing all the banking news, I'm seeing FTX blow up and seeing SVB blow up. What 3 pieces of advice would you give to someone who's watching that wants to invest, but it feels like it's the most terrifying time to do so?
That's a great question. And I get scared. I've been in this a long time and I get
Yeah.
scared sometimes too. So I have a couple of rules. And I think I've heard Ian say this too. What's your threshold? What's your threshold for losses? For me, that threshold, and I'm 52, right? I've got about 30, 40, hopefully 30 years of investing left in front of me. And that's a long time. My
Yeah.
threshold probably for losses is around 50% until I'm just like, I can't. So I know what my
Yeah.
pain point is, right? What can I recover from? What do I have the time to recover from? So you got to determine that, right? Then realize that these things happen a lot, right? These cycles happen. They may feel like they're happening a lot quicker these days. Time is compressed. Social media is giving us the echo chamber. It feels like it's all coming at us at once. Last week felt like 6 months. I was talking about this nonstop. So these things happen and they're happening faster, but eventually they resolve. We go through cycles. This is a pure product of massive inflation coming out of the pandemic, a huge rise in interest rates to tamp down inflation, and all the broken pieces that we're going to discover, or as Warren Buffett likes to say, when the tide goes out, we're going to see who's swimming naked. There's a lot of banks swimming naked. There's a lot of tech companies swimming naked right now, right? There's a lot of companies that binged on cheap money, right? But this cycle is going to end at some point, and you can actually see it in the Fed's dot plot and in their summary of economic projections. Growth's going to slow this year a lot. It's going to pick up a little next year. Interest rates are going to come down to around 3% by the year 2025. That is a much more normalized environment for investing. And by the way, while we're all worried about a bear market, we're not in one anymore. And the NASDAQ is on its way to a bull market. So there's always a place to invest. Cycles happen. You got to stay with it. And you got a dollar cost average. Because if you were smart, and I heard Ian saying this, I heard you guys saying it in the last couple of shows, you've been dollar cost averaging into your favorite stocks for the past 8 to 10 months.
Yeah.
If you were smart and you've been getting great deals and your average price is low and you're probably sitting on gains right now. So that's what I would say. These things pass and then we resume, we normalize, and then something else happens. But long-term investors, right? The tortoises, they're the ones that usually win the race.
You said the NASDAQ is headed towards a bull market.
Yeah.
Elaborate on that as far as the long term. So its high was 14,646. It's currently at 11,768. Backhand math, that's probably still 30% off of its peak.
Right, but you want to look at where it is off of its low.
No, I'm just saying. So what I'm saying is that what's the outlook for the NASDAQ next year and a half?
Well, because the NASDAQ is a market weighted index, right? Market cap weighted index. In other words, it's moved by the size of the biggest stocks in the index. It's going to move wherever Microsoft and Apple and NVIDIA want to take it, right?
Yeah.
So as investors are thinking the Fed's going to eventually pause, that's one of the reasons we've seen this rally. One, Apple and Microsoft feel like safe stocks. They pay dividends. They're massive. They have a lot of cash. But also, as interest rates start to cool a little bit, maybe after May, after June, they're going to either stay kind of at these levels or they're going to come down over the next 2 years. These tech companies are going to benefit. So the NASDAQ's going to do well because it's market weighted and the biggest stocks drag it around. And as long as investors are piling into the safety of big tech stocks right now, like they are, the NASDAQ's going to keep rising. Now, if we get another shock to the system, that could change everything. But right now you're seeing this bifurcation, right? Of what was hot is no longer hot, but also the 2020 stocks, those are long gone, but the leadership is back in the big, strong tech stocks. So that NASDAQ should continue to do pretty well. It's already separated from the S&P 500 by about, 16% or so. So that I would probably think that that's going to continue unless we get another shock and the Fed goes, we're raising rates a full percentage point, which they won't do because that'll break everything. So I like the trend of the NASDAQ right now, and I buy the QQQ ETF and I buy it all the time, up, down, all-time highs, 52-week low. I keep buying it because I believe in that, like you guys, growth long-term.
Yeah, I'm glad you alluded to it. So, because some people get confused about what the interest rates did to the tech companies, obviously in 2022, and why it was down 33%. Can you kind of clarify that and explain that to our audience of how interest rates affected those large cap tech companies?
Yeah, right. These big tech companies, even the most profitable ones, they borrow a tremendous amount of money. Well, when interest rates are 0 or 1%, money's cheap. They're going to borrow as much as they can to finance operations, to buy other companies, right? To pay off, buy more of their own stock. That's like arbitrage on cheap interest rates and then using it for growth. When interest rates rise, they borrow less money, and the value of the assets that they hold in government bonds, treasury bills, mortgage-backed securities, or other corporate bonds, that falls as well. So they get squeezed by the fact that they're borrowing less, right? They're paying more on what they own in terms of their investments, and they're not spending as much money as they used to. Now, these tech companies need to spend to grow, right? They're not just tech companies, growth companies. Let's just call them growth companies. There's a reason for a long time Starbucks opened a store on every corner. To grow, they had to recognize revenue on new stores. A lot of these companies grow really fast so they can recognize revenue, because that makes them more attractive to investors. So all of a sudden, when that money gets tight and interest rates go up and they borrow less, and they're borrowing at 4%, they're going to borrow a lot less, and the value of what they own is worth a lot less. That's why they got squeezed. Does that make sense?
Yeah, I also want to ask you this. Why the hell is PepsiCo in the queue? And have we seen what companies should replace PepsiCo out of the triple Qs? Isn't that a sign that we haven't created a great company maybe since Tesla or Meta? I know it's only 1% of the Qs, but I've always wondered, why were they in there?
Why was Pepsi in there?
Yeah.
Well, I think some of it was that Indra Nooyi, who was the CEO, was on a massive growth campaign. They acquired Frito-Lay, they acquired, Gatorade. They started acquiring across channel. So their MO was growth. Coca-Cola does what? Coca-Cola is the brand, right? Coca-Cola is the merch, Coca-Cola is the syrup, but it is really a beverage company at the end of the day, right? It's almost like a commodity in a lot of ways. PepsiCo was a cross-channel, doing a multi-strategy approach. Snacks, power drinks, soft drinks, a couple of
multinational as well.
Right. Yeah. And both global companies, but I think investors perceive them very differently, and a very different business model at the end of the day.
So hit the like button, share. Let's reset the room. Headed into the final stretch of Market Mondays. I got a question for you. So being that, okay, we know invest in the stock market, long-term, ETF, index funds, dollar cost average, that's the safest way to go about it, right? We're not confident with this banking system currently. Even if we were confident, you're not going to make any money with money just sitting in the bank.
Well, 4%.
So all right, real estate, right? Even in Monopoly, and I am the Monopoly champ. Shout out to my sister. She actually just got me a new Monopoly board for my birthday.
The best.
This is a different conversation, but
I'm saying nothing.
You don't win Monopoly by having the most money. You win Monopoly by having the most property, because eventually somebody's going to land on your hotels or your houses, and they're going to have to keep paying you until they go bankrupt. So how, in a perfect world, right? Let's say somebody has $3 million. How much money should be allocated towards real estate? How much money should be allocated towards stock? Is it better to put excess cash just in real estate? Because it's tangible. It's not going to go away. Somebody's always going to need somewhere to live. And in the stock market, anything can happen.
Yeah. Great question. Great question. All right. I was doing this the other day. The real estate market, the US residential real estate market over the past 20 years has gone up an average of only 5% a year. All in. I know that sounds crazy, but if you take the entire country and the value of all residential real estate, 5% a year on average.
Median growth. Okay.
Right? Not just 5%, 5% a year on average. Not bad, not great. That same period for the stock market. So that's up, that's 5%. The stock market's up about 8 to 9% a year on average over the same time period. Now, we've had an incredible period of growth. I heard you, I think last week, Ian, talking about the fact that if it weren't for Obama and QE, the whole last 20 years of stock market growth wouldn't even have happened. Maybe not, but there is something about the fact that, American companies growing big and kicking off profits and dividends that has built wealth over time. So either way, pound for pound, the stock market has been the better place for your money. Now, that doesn't mean that it applies to all investors. Some people buy real estate because they need a place to live. That's an opportunity cost, right? So you have an asset that should be growing over time, and you got to live somewhere. So it provides a function to you as well. And maybe you want to pass it down through your estate to your kids, your grandkids, whatever. It serves a lot of different purposes, whereas a stock is literally a piece of paper, not even that anymore. So think about the use case of that. Now, we asked people at Investopedia, our readers, how much they think they need to retire. What's that magic number? And then that magic number doesn't change, guys. It's about $3 million. Now, Ian's right. 10 million is real wealth, right? 10 million kicks off 700,000 in interest a year for you to live on right now. That's pretty good. But 3 million. So I think you have to have, and it depends on what age you are too. But if you're like my age, I'm going to speak from personal perspective, 52, I'm still long the stock market, right? I have some real estate assets and some private equity and some private businesses, and I have some side investments and stuff and a small business and stuff like that. But mostly for me, it's the stock market, because I'm one of those people that believes in that compounding magic, that fairy dust that's sprinkled over the stock market that allows it to grow an average of 9% a year. Didn't happen last year, but the 3 years before that, guys, stock market was up 100%. Is that going to happen next year? No. Do I think we're going to be down another 22%? No. But if we are, I think the year after that's going to be a lot better. And the year after that's going to be a lot better. And over time, that's the best place to grow my money.
Do you think the 60-40, let's say stock, real estate portfolio is going to be the new 60-40 stock versus bond? Because the bond market has blown up the last 2 years. And I mean, I'm shocked. Can you tell me why? I know a lot of international companies pour their money out of our bonds, but I had never thought, obviously, the bond market collapsed this fast. Do you think that 60-40 real estate and stocks will be the new replacement for the next 20 or 30 years?
Real estate is one of those finite resources as well. So as much as everybody would love to own some, it's very hard to own real estate in desirable places where you believe the value is going to go up. Now, I'm obsessed with these like government land watch foreclosure auction things that come across the internet all the time. And I get a newsletter and it's trying to sell me property in places that it's just not viable. So you could be like buy a bunch of houses in Arizona. I don't want to pick on Arizona. I'm from New Mexico, but there might not be any water there in 20 years. So that's not such a great idea, right? Or buy, you see these houses for sale in Queens by the Bay. They may not be there in 20 years. I'm sorry. We've already had Sandy. We've seen what happens when the water rises. Miami, right? Everybody wants to live in Florida until you live in Florida, right? But Miami is having its own problems. So it depends on where you're buying, what you're buying. Now, if you follow the smartest money in the world in real estate, it's Blackstone, right? Steve Schwartzman donated the public library, multi-billionaire. What is he buying? Warehouses. Where is he buying them? Everywhere he can. Why? What do we use warehouses for? Data storage and Amazon storage. When you drive on the highway, what do you see? Amazon trucks. When we're doing this, what's going on? Data storage, right? So smart real estate is buying things that they can use, not just buying houses in college towns, which isn't a bad thing to do either, but you got to think about where you're buying and what you're buying.
Caleb, I wonder from an investment standpoint and from a professional standpoint, the landscape for what you do, your thoughts on OpenAI and ChatGPT, as far as finding companies that are leading the advancement in it and, putting money behind it, because it's not going anywhere and it definitely would be part of the future. So what are your thoughts around it?
Yeah. It's one of those things that ChatGPT in general kind of scares me. It's either going to be the worst thing that ever happened to Investopedia or the best thing that ever happened to Investopedia. And I'm going to believe that it's going to be the best thing. Why? Because even though it's really smart and it could tell you what is PE ratio or what is compounding or how to invest $10,000, there's nothing like the personal touch. Rashad, you're a former advisor. You're an advisor. You know what that's like. The relationship is everything. And there's a way to speak to people that it will never be able to do. And there's brand authenticity. We've been around 23 years. Hopefully we'll be around another 23 years. So it scares me. That said, it's also one of those things that I know it's important. I know it's going to help a lot of industries, healthcare, education, finance. I think it's going to be very useful in all those industries. But you guys know this well. In every era, in every few months, there is a new thing. And if you
Yeah.
change your company name, like Block to Square or Square to Block, or it used to be cannabis, or it used to be crypto, if you put AI in your name right now, your stock's going up 10, 20%. There's a hype around it
Yeah.
as well. We haven't exactly seen the practical applications that will be widespread and change markets forever, but they're coming. I just read something by Bill Gates, of all people, on his Medium
Yeah.
blog
Yep.
about why he thinks it's so important.
The most
I learned
important
a ton of
invention.
things I didn't know.
So we had some other stuff that we was going to talk about, but Ian, I think let's talk about those
You're
same
right.
topics. Let's
Yeah.
talk about those same topics, but let's have. If you want to stay on, you want to stay on, Caleb?
I'd love to if you're having me. I'm sorry
Please.
for
Yes.
All right, so
dominating the convo. but
No,
you
no,
guys-
no. I love it.
Perfect.
So now we'll just go back to the regular format, and then we'll just have everybody chime in, including yourself. So TikTok's current CEO was grilled by Congress last week based on his commentary. Is it time for America to ban TikTok, or did he make a case that the app is safe? So TikTok is under fire. It has been under fire for a long time. What is the current? What's your guys' thoughts on what happened and the future of TikTok?
I don't think that the CEO did an amazing job of giving the lawmakers feeling of safety. I don't think he came off as a threat, but when the grilling was over, and
5
still,
hours.
I don't think anyone came to a conclusion of, okay, we can trust him, we can trust this company. Here are the things they're going to do to mitigate any espionage fear that we may have, like a Red Dawn kind of event. I think a little bit of the things they are worried about are being done by American companies at scale. I think that a big tech company may be pushing lobbyists too to push some of these narratives. How do you guys? I'll be there in like 3 weeks. But even though they've been demonized, he didn't do a good enough job to make even American parents be like, hey, I'm going to protect your children. But here's the funny part. After that, I saw more kids be excited about TikTok and say, I'm not going to use Instagram as much as a result, or it's not going to make me use Instagram more. So I think this was really a stalemate. I don't think they'll eventually ban it, even though that's a great talking point. But he didn't do a great enough job to convince us that he was not a threat to our democracy.
I agree with you. I don't think he made a case that the app is safe, right? So what's the issue?
Didn't.
The issue is saying that TikTok is threatening national security and user privacy and can promote pro-Beijing propaganda and misinformation. That's the case, right? His defense was no. He says that the company, which they're saying that they have all the storage and all the data, is actually going to be stored in a U.S. user database that is maintained by the giant software company named Oracle, American-based, right? The other part, which is interesting, is that during this 5-hour grilling, he brought up some pretty big investors that are a part of the TikTok investment group that you may have heard of: BlackRock and Sequoia Capital.
Wow.
And so it's like when your back's against the wall and the American government is coming after you, let's remind them who's invested in this company. And so they reached out to BlackRock and obviously Sequoia Capital and KKR. Nobody had a comment. So do I think he made a case to show that it was safe? No. But he also put out a reminder, hey, these American companies are also part of this. The other part that I found, and this is like the #1 deleted app. You know what the #1 deleted app is right now?
That'd be Facebook.
No.
Instagram.
Instagram.
Yeah.
Facebook.
Interestingly enough, most people may ask what is the app that they want to delete. It's Instagram. And so it goes into that level of defiance. What we can't do, we want to do more. And so it makes sense why kids would want to be on something that they're saying that their parents or the older folk are saying you shouldn't use. No, this is ours. It treated like it was the same way when Facebook came out, was like, oh, this is for us. Your parents aren't allowed to be here. So it's interesting. Do I think he made his case? No. Do I think it will be banned? I'm going to monitor it closely. It's interesting. It's especially with government. When we were talking about bipartisanship, there's some things that they're never going to agree on, but it felt for that 5 hours that this is a topic that everybody's on the same page with.
Yeah, I think you might be right. And I think what we also learned is how little lawmakers understand modern technology.
Yes.
Oh,
Oh my God.
like
That part.
that was crazy. But that said, remember, I'm dating myself, but Napster, right?
Mhm.
That was against the industry, and the industry railed against Napster, but Napster found its way, into the people that really wanted it. And then it spun off all these other things that became the way we stream music.
It
Ultimately,
became Apple Music and Spotify. Yeah.
exactly. So it's
Yeah.
one of those things that may go under, but it's going to come back as something else because people that like it and people that use it and creators and tech enthusiasts and really smart people know their way around this. So even if it gets banned, people are going to use it, right? And then it's going to come up as something else, and it's going to be probably even more dangerous. But he didn't convince anybody, and not that anybody would ever believe, even if he said to our faces, no, your data is 100% safe. We're not doing anything with it. Of course they are.
Yeah.
Yeah. I think TikTok is. I don't believe in TikTok. I don't believe.
Why though?
I don't believe it's as strong as it's made out to be. As far as the eye test is not. I have a very good pulse on pop culture, current events, and I'm not convinced with TikTok. But social media I think social media as a whole is kind of falling apart. You can buy blue checks on Instagram now. You can buy blue checks on
Which is
Twitter.
smart for the business.
It's bad for the brand. Exclusivity is always a major part of any marketing campaign and any type of, you want to be in a club that nobody else is in. It's bad for the brand. I think you can't reach your full audience. That's always been an issue. The algorithm, it's so much nonsense. It'll be interesting to see what the next iteration of social communication will be. Maybe it's something with ChatGPT, maybe it's something with AI. I think that it definitely will be in that. And I think it's actually smart that Meta at least is trying to try to be the forefront. I don't know if they will capture that audience or not, but I think social media, it doesn't have too many days left. When I say days, I mean like years. Like, they're not going to fall apart tomorrow, but I think it's on its downward.
It's on decline.
Yeah, it's too much nonsense happening on social media, period.
I got teenagers and for them it's Snap all day long.
Yeah,
all day, every day.
kids is communicating on Snap. My son doesn't even send regular text messages, a Snap group chat. So Snapchat is still very viable as far as the communication. It's scattered. It's all scattered. They're using Snapchat to communicate. They're using TikTok to find restaurants and recommendations and dances. And then people are on Instagram for their news and celebrity gossip. They're on Twitter. So they're just using different platforms for a variety of different reasons. So social media is in shambles. But we'll see what happens. But I'm just not a believer in the long-term viability of TikTok.
You have the most social media users in the world of any company. Half of all Americans have accounts on TikTok.
Absolutely. No, what you just said was incorrect though. They don't have more users than Facebook. Not even close. Not close. Not even close.
Okay.
True. Facebook, I think it's like 2 billion.
Yeah.
Really like 2 billion.
Yeah.
Oprah likes to say.
Let's take it from the record. Let's just strike that from the record.
No, I looked at Investopedia and it said Facebook.
No, it's definitely Facebook. Facebook is still
Facebook.
Yeah.
Oprah said it too. 2 billion in 2 billion pockets. She said it herself.
2 billion pockets. That's a lot. That's a lot.
But we'll monitor this situation. Okay. Let's talk about.
I will still be on record about this. TikTok is going to surpass Instagram. It's no question. Texas is the person who keeps going to Meta. I've never got a cease and desist from Meta. They never said anything that I said was wrong. How many active accounts? Listen, Instagram created ChatGPT. They had the bots going 4 years ago in their comments and have not slowed it down. That's another conversation for another day.
That's another thing.
We ain't never going
to. The bots are destroying social media. Fake pages are destroying. It's a variety of
it's a lot of craziness
that is destroying social media. Let's talk about First Republic Bank. First Republic Bank ends 13% higher for the day. Is it now time to begin investing in regional banks, or should we stay away?
I am personally staying away for the time being. I'm afraid, despite, even though it was a good run today, there are some like safety measures that are being put in place. That's an amazing thing. But like, if my life was on, my ultimate question before I make any investment, like, hey, if my life was on the line, if Xander's life was on the line, is this what I'm going to buy? No, it does not pass that test. No, at this time, I would not.
Caleb, I saw you put 2 hands up, so I'll be brief as possible because I know you want to go after this. I just look at it. it's like one of these things where it's like, find a sector, find the top
Yep.
3 in that sector,
Stick with
and
it.
stick with that, right? Like if we're talking about the 16th largest bank, that's great. If it's part of an ETF that I invested in, okay. If I'm doing it on an individual basis, not so much. I stay away, even though, like we said, we saw First Citizens go up 50%. First Republic was up 18%. Western Alliance, which we talked about on Dead or Alive, up 6%. Key Corp up 5%. So we're seeing it happen. Is it sustainable? I'm not.
I don't think so.
I'm not looking for it to be.
Yeah. The shares are down 88%, 90% in the past year to date. Again, remember the math. So you want to buy it for a trade and hope that it pops tomorrow and sell it and be dispassionate about it. That's trading. Take your chances. But buying it to be like the driver of your portfolio or one of the drivers of your portfolio, super risky right now. Let the smoke clear on the banking sector.
Yeah.
You want to do something smart? Put it on your watch list with a bunch of other banks, or put the ETF, KRE, the regional bank ETF.
Yeah.
Put that there on your watch list and just watch what that does, because that's going to tell you where regional banks are going. This is not over by a long shot. So I would just wait. And as retail investors, individual investors, we don't have to do anything.
Yeah.
We can just watch.
So,
If it drew down 88%, really quick, if I could have a follow-up shot, what gain would we need to get to break even? Is that like 240%, 250%?
Yeah, don't make me do math. I'm an art major, but it's something like that.
That's insane.
Down 50% means 100% to
Yeah.
recovery, to par. So if you have money in it and you're trying to get back to par, that's not going to happen. But if you're like,
No.
this seems pretty low and I feel like it's going to be rescued, and you want to buy the trade and put a stop on it, right? That's a way to trade it. Or buy an option on it for a little bit cheaper and make sure you have your time horizon set. That's fine. That's trading. But if you're like, this is a foundation of my portfolio, I believe in this bank, just hold on. There's a lot that needs to happen here. We're like in the first inning of this whole mess.
And more will fall.
Absolutely.
Enough, yeah.
So, president of China and the president of Russia, Vladimir Putin,
Yes.
they were seen recently, and it was overheard. The president of China told Vladimir Putin that we're about to see an opportunity that we haven't seen in 100 years. And obviously it's speculated that was no, that wasn't alleged. That was said.
No, that
I mean, it was said though. I
Fendi.
can interpret it, but maybe somebody did.
Well, okay. But it was said. So the interpretation, we're assuming that the interpretation was correct. Well, how they interpreted it. And people assume that what he meant by that was that America is vulnerable and there's an opportunity to seize power, for lack of a better word. We're hearing other countries throughout the world and in Africa and different regions telling their citizens to drop American currency.
$1. Yep.
Where does America stand in 2023? And how does this affect everyday people?
This is the scariest, and Caleb, you can chime in. This is the scariest macroeconomic problem that we have to solve, because I don't have a clear answer to it. So when like the president of Kenya told his residents to drop the US dollar, they're not the only one. We've been talking about the BRICS situation for 3 years. The biggest threat, if I'm doing a SWOT analysis, is if, like I said, China, Russia, India all come together, in addition to Mexico and the smaller countries, because the smaller countries like Kenya are going to be like the fighter pilots that are the test in. And then I'll see Putin and Xi Jinping making pancakes like they've been best friends since the 8th grade. I'm like, how long have they been planning this attack? For the average citizen, and if they're seeing that we're weak, and I've said it before, tech companies are not as strong as they used to be. Our policies are not as strong. Our leadership is not as strong as they used to be. The morale in the country is not as strong. And if we're being very honest, we don't feel confident in the banks and the companies that are here, let alone parts of our military. That Ray Dalio book seems like a prophecy every time that I go back and read it. I don't have the solution to it, but I'm terrified. This is why I keep going internationally, to seek out little places and see, hey, if this all goes to hell, working me it's time to go. And actually safe harbor. Shout out to all the Bahamian people. I'm like, hey, do I have safe harbor here? Let me know. Please let me know.
Toronto, we're on the way.
For real. So I
There's
think
some room for me.
yeah, I mean, I think we've been bullied so long. We've been the bullies so long that the entire world is starting to team upon us. But if they start to unpeg from the dollar, or the Saudis decide not to use our dollar to buy oil, it's going to be game over. But I don't have a clear answer for us. Caleb, what do you think?
Yeah, what you're referring to is Ray Dalio's book, because they're asking in the chat. Ray Dalio, D-A-L-I-O. His book is Principles, and he's got multiple editions, Principles for a New World Order. And that's what you're talking about, the end of the empire.
Yeah.
This is the end of the, he says the end of the American empire. Lasted,
Feels like
a good 200-300 years. But all empires end like this, and massive inflation, massive government spending, credit bubbles that burst, and all the things that come after it. It's happening. Is it going to happen in the next 10 years? No. This is a 20, 50 century long process that's going to play out over time. Now, all of these countries can tell their citizens, stop using the US dollar, stop buying government bonds. That's never happening. Not right now. There is, I was just looking, something like 12 billion $100 bills out there in the world. It's the most widely used currency in the world. And you know what? China and Russia, palling up, that's great. But you know who buys Chinese products? American consumers. We are their biggest customer. You know who buys American products? Chinese consumers. They're our biggest customer. We need each other. We're symbiotic. So they can talk tough. And that soundbite that they picked up and transcribed, that was on purpose. The whole thing is on purpose and orchestrated. We all know that. But you're not wrong. This is sort of feels like the end of an empire, but it's not going to end tomorrow. It's going to take a while. And different things happen in those periods that create dynamism, that allow people to thrive and do other things. And it may mean leaving the country ultimately, but I'm not planning on that. But this is kind of what happens. This is the end of the big bubble, and this is what we should expect. But again, this is not a tomorrow thing. This is going to take multiple decades to play out, but it is the trend.
If I can do a follow-up, what will set the stage for the third big calamity? I don't want to say WW3, in case YouTube gets upset. But what will set the stage for that could speed up the process of the fall of our empire? I'm not asking you to be a historian, but from a financial perspective, I think it may be an interesting question to dance around with.
Massive bank collapse across the biggest, multi-trillion-dollar banking institutions in the country would do it. But you could also have that happen somewhere else, and we would be affected by it because all the money's tied together. So there's that. There's the black swan events, a COVID, a climate event, which is not out of the realm of possibility at all, a massive climate event. Imagine what that would do to insurance and to risk in general, right? We're not just talking about, tornadoes, and those are all terrible, tornadoes, floods, but we're talking about the notion of insurance and property insurance. You can't get property insurance in Florida. Nobody will insure you there. So imagine if that starts to happen everywhere else, and all of a sudden there's no guarantee on any assets, a total lack of confidence in the entire financial system. That could do it too. Again, not a tomorrow event, but something that could happen over time. And that's what you got to watch out for. It's like, what are we not paying attention to that could really wipe out everything and the ground we stand on? That's probably a climate event or another black swan illness, that, a pandemic.
But what you're saying, we should make mastodons mass available in the United States and let flus come from them. And what do you think about that company that does regenerating woolly mammoths?
I think they're going to find some customers that have a lot of money that want to buy a woolly mammoth, and they'll build their own Jurassic Parks. But, the minute we think we've heard the craziest thing out there, we hear something like that, and we're like, oh, I guess that's happening now too. So,
this natural resources conversation. Are you up on lab grown diamonds?
I am not.
Lab grown diamonds.
Oh, yes, I am. Yes, I am. I saw a segment on that. That's totally fascinating to me. And that seems like a reasonable use of technology and also something that's going to devalue a huge asset.
It's amazing.
We've been having this conversation.
It's amazing. That's an amazing conversation to have, because it's like, once it was explained to me that those diamonds are actually passing diamond test.
Oh yeah.
They're real, they're not cubic zirconias, they're actually real diamonds for a fraction of the cost. They're made in a lab, so you can make them as perfect as you want. You can make different colors. And obviously you don't have to, dig in the ground. You don't have to use child labor. You don't have to start a war to get the diamonds. Things like that are interesting, right? Because we're in this new age of technology. So it's like, imagine if diamonds are now only grown in labs, or even 30%, let's say 30% of the diamond market goes to lab grown diamonds. What is that? That's billions of dollars that have, and if they can grow diamonds in labs, what else can they grow in labs? Can they grow gold in labs? Probably. Why not? And gold has always been the most secure commodity asset ever. Even now, you said people are still buying gold bars now in 2023. So it's like, what if you can actually grow a gold bar in a lab and it passes the gold test, and it's gold. It's not fake gold. It's real gold.
Gold is a natural element. It's on the periodic chart.
It's
But what you're speaking to is the perception of value, right?
Right.
Things
Perception.
that we hold dear and put a price tag on. If all of a sudden that doesn't exist anymore and the notion of value changes, that changes a lot of different things, right?
Yeah.
But as far as I know, we're still going to use dollars, legal tender, and I think the rest of the world is too, just because dollars are the most widely circulated bill out there. And the US Treasury is the most widely held asset on planet Earth, and the safest asset on planet Earth, still perceived that way despite our problems.
My final question for you tonight: you've interviewed a lot of amazing people. What's the most interesting person that you may have interviewed, and what's the biggest lesson that you gained from them in that conversation?
I've been lucky. I've interviewed a lot of impressive people. I interviewed the Dalai Lama. That was pretty cool. Pretty soft-spoken guy. But I always bring this up. It's Charlie Munger. It's Warren Buffett's partner, the vice chairman of Berkshire Hathaway. Amazing. I think is he 102 or is he 99? I get those.
I think
99 and Warren's 92 or 93.
Yeah.
Okay. I interviewed him about 10 years ago, and I asked him this question, like, what was the most valuable lesson you've learned in your life? And he said that he, even at his age, doesn't have the capacity for people that don't have the ability to change, to recognize that they can change. And he wasn't talking about money, and he wasn't talking about investing. He was talking about people that don't have the ability to get themselves to that next level, or who can accept a fault and try to do something about it. And he was talking about a very personal issue within his family. He was tearing up. And I got teared up about it because this is a guy with billions of dollars, one of the richest people on the planet, partners with the greatest investor of all time, talking about something that is like you and I would feel about losing a friend or losing a loved one or somebody in our family that we just can't see eye to eye with, who just can't change, or even ourselves. That really stuck with me. I think about it all the time.
Caleb, it's been an honor.
Yes, you're amazing.
Before we leave, one last question for me.
I got one more too after that.
So we talked about Bitcoin earlier, but my last question is, since we're in the future, we're talking about future stuff. Will there ever be a time where cryptocurrency is actually used as currency and not as investments or a store of value, how it is now? And yet, do you ever see, and even talking about XRP or, Ethereum, do you ever see a future where cryptocurrency is really used as currency across international borders?
Well, that's the point of Bitcoin, is that it was created for that reason, right? For money transfers, because people pay exorbitant fees. So in a way, it's kind of already happening. And El Salvador is a case where it is legal tender and you can transact in Bitcoin, but I don't believe anybody's been doing that lately. But I do believe we'll get to that place, whether it's going to be a Federal Reserve coin or the Chinese People's Bank of China coin, the digital coin. Everyone's going to have their own little thing. I think we will start to use that a lot more. But do I ever think that anything is going to supplant the US dollar as legal tender? Yes, the bill will be gone. Our grandkids probably won't use it. Our kids might not even use it in 20 years, but it'll still be the notion of a currency backed by the full faith in of the government, full faith and credit of the government. I think it has to be, right? Unless we're just going to live in an anarchistic world, and it's hard to get anything done like that. But I do believe that we'll see Ethereum in 5 to 10 years. It's the smart coin, right? They use it for software. It's not so you could trade it, but that's just trading. And I think we'll use Bitcoin because it's being used by enough institutions and held by enough institutions and accepted by Visa and MasterCard, and Fidelity's custodian it, as I said earlier. So these are going to be around for a while, but I think it's going to be the dollar for a long time, guys. I know people have their doubts, and the banking crisis doesn't make it any easier to believe it, but it is the full faith and credit of the United States government that backs that bill that you're going to take down to the Carvel on Central Avenue right when this is over, buy Troy double with sprinkles. That's going to get that paid for.
You know our community very well. Gil, we spoke about this the last time you were here during the pandemic, the influx of people level of interest inside of the world of investing increased, right? And so I wonder now, from your standpoint, the amount of traffic, is it still the same? Do you still see the level of engagement, the level of enthusiasm, the level of interest inside of this world of investing as you did 2021, 2022?
No way. We haven't. And that a lot of people are back to work, right? That's one of the things. And some people are going into work, a lot of us. There's that, and there's just not that cash lying around. There was a lot of money that went out to households, like about $6 trillion. So people had a lot of cash on hand. So we have less of that. But you know what happens in times of fear? People go to other parts of our site. So what's popping right now? What's popping right now is, what's the best high yield savings account? How do I buy a CD? How do I buy a government bond? What do I do with 10 grand if I don't want to put it in the stock market? So you're getting all the safety questions, and you're getting all the anxiety questions about, how safe is my money? What is this FDIC? What about my 401k? All the questions your smart viewers have been asking here. I'm watching on the chat. They're asking us the same thing on Investopedia. So it's not nowhere near the volume of traffic, but in the last few weeks, it's been pretty hot, guys. But it's the questions about people's households, their finances, and protecting themselves more than, where do I make the what's the best trade for me right now?
Thank you, Caleb.
Yes, you're amazing.
Always
Thank
an honor,
you, guys.
pleasure. Thank
Yeah.
you. Definitely check
Honor
out
and the pleasure's mine.
check out Investopedia if you have any questions about investing.
You see that bottle?
Appreciate that.
I think we have to retire your jersey.
Appreciate
You might have
that,
to get a
man.
jersey retired, man. This
Yeah.
is like your second time
Absolutely.
here. You've done 3 events.
He's in the EYL Hall of Fame.
That's a fact. That's
And
a
your
fact.
London performance
I'm
was
blushing.
phenomenal too.
The honor's mine. The honor's mine. I'm so proud of what you guys have been building and what the work that you guys do. It's just an honor to be on with you and to be friends with you. And I thank you so much for what you're doing, and just for, opening up the door to me as well and to Investopedia. We're super grateful.
Thank you.
We got to do dinner again soon too.
My
Absolutely.
dear friend, thank you.
Thank you.
Thank y'all.
Caleb
Yes,
Silva, everyone.
Caleb Silva. Yes, it's been an honor and a pleasure.
That was
Always,
amazing.
always a lot of information, man. The guy's a encyclopedia. Definitely check out investopedia.com if you have any questions about investing.
Definitely a
One
site.
of the greatest resources out there. Before we leave, cannot leave without talking about some pop culture stuff. So, Jay-Z,
Yes.
shout out to Hov. Put that album
Definitely.
up. I think that's an underrated album. Some of his best verses ever on that album. Imaginary Players, Where I'm From, Streets is Watching,
Mm-hmm.
Friend of Foe, Volume 2. That album right there has some of the best verses ever. But Jay-Z currently worth 2.5 billion. He jumped up from 1 billion to 2.5. Obviously, we know a large part of that is from the sale of the liquor company.
Yeah, the 2. He had the LVMH sale, and then he had the Dipset with Bacardi, the settlement.
Yeah.
Yeah.
So, all right. Congratulations to Jay for becoming a billionaire 2 times over. But what
Right
are
behind
some,
Oprah too.
Yep. What are
Yeah.
some lessons that we can learn from Jay-Z?
I think with the sale of those 2 sales, I think it's really important to know what sectors you can go in to know where you can monetize. I told a story here before, but I'll tell it again. Like when I was in marketing and advertising, I went down to Forbes list of Forbes 400. There was only one person on the billionaire list at the time. Sorry, Martin Sorrell, WPP. There's no one else on the list at the time. I went through finance, went through the hedge fund and banking sectors. There was like hundreds of people that was like 100 million up, right? So I think it's really important to know what spaces you are able to be in that will provide you that kind of liquidity event that will allow you to get to that $100 billion valuation or net worth. And then also, I mean, just to be real, for the country that we live in, we have to factor in Q or racial background as well. There's some spaces we have not been let into yet. So it seems like him, Diddy, 50 are doing a great job in these spaces of being allowed in, and once they get in, having a dominant impact on that landscape. So that was one of the biggest takeaways that I took from it.
I think manifestation is one of them.
Yes.
We followed him his whole career, and so for him to tell you like billionaire hole, how you get that far, I'm on my way to a billy if I play my cards right. He's been manifesting that as part of his destiny, and so to see it come to fruition, it doesn't even surprise you. You just know that this is what he sought for himself. I think the other part is knowing your leverage, right, and ownership, right. So like every time I think of something, it's always in a J line. So like when he had a piece of the Nets, and people were like, well, he only has 1%, until you break down 1% of a billion is more than people ever seen. So they acting like it's an everyday thing. Like Irv Gotti said that to us, right? Like you can't sell what you don't own. And the fact that he had ownership in Dipset, and the fact that he had it in Ace of Spades, and he was able to leverage that to accumulate more wealth, it tells you the mindset that this guy has, man. I don't think it's any secret that, anytime they ask us who we want to sit down with, it's him because of that. And from a long-term standpoint, like he was promoting other brands until he realized he had to have his own. And then he held those brands. And I know it feels like it was short term, but he had Dipset for almost 9 years. He had Ace of Spades for over 10 years before they ever, decided to sell. And so we always talk about 5 to 10 years. And when we talk about stocks, 20 years, this was a long-term investment inside of it. And he held the brand high anytime that he was out, right? It was like, it's a gold bottle. It's the gold party. So congrats to him, man. There's a lot of lessons that can be learned. Those are those three that come to mind, though.
Yeah, shout out to Jay. Hov is definitely one of the greatest to ever do it when it comes to business and everything. But I just want to go through. I believe there's like around 17 Black billionaires in the world. So we made a list about this. Aliko Dangote,
Well played too,
is the richest Black person in the world from Nigeria. Estimated $11 billion. He's into everything from cement to salt to sugar to almost anything you can think of. And then Mike Adunka, I don't want to mispronounce his name. He's also Nigerian. He's the second wealthiest person in the world. And then our good friend, Robert Smith, he's worth $8 billion. He's the third richest person in the world, followed by another Nigerian. Not sure how to pronounce his name. A little bit more complicated. Abdul Samad. And then David Stewart. He's a Black American. A lot of people don't know who he is. He's in the tech world.
Yep.
And then Patrice Motsepe. He's from South Africa. Oprah Winfrey. Jay-Z. Steve Sturve Maeswa. He's from Zimbabwe. Michael Jordan, the great legend. Don Peoples told us that his net worth was $2 billion. So
for the first time.
He revealed his net worth to us.
Yeah. And the Jordan valuation might go up if he decides to sell.
Yeah. So we gotta throw Don Peoples in there. Alex Karp. A lot of people don't know who Alex Karp is, and they see the picture and they don't think that he's actually Black.
Yeah.
If you just Google him, Alex Karp, he is Black. I believe his father is Black and his mother's Jewish, or vice versa. Vice versa. He's half Black, half Jewish. But he's in technology also. He's American. And then Rihanna, of course, Fenty. Michael Lee Chin is worth $1.4 billion. So
say what country he's from,
bro. Canada, by way of Jamaica.
Come on, why you
he's Jamaican, Canada.
Like, why you gotta do all that?
Canadian and Jamaican.
Yo, put the flags in the chat, man. Don't let Shai do that to us.
Tyler Perry.
Bum, 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 bum.
Tyler Perry. And of course, the great legend himself, Sean Diddy Combs. And I think LeBron's a billionaire too.
Yeah, LeBron's a billionaire.
So, what's so crazy about this is that there's around, let's say 11, 10 Black billionaires in America, like American, 10, let's say 10, 11. We personally know 4 of them. That's 40%. That's 40% of the Black billionaires. That's kind
of a good bet ratio.
That's
crazy bet ratio.
Amazing.
That's Falco era. Like
pretty amazing. When you look
Yeah.
at Tyler Perry,
Mhm.
Robert Smith,
Mhm.
Don Peebles, and Diddy.
Yep. And a bunch of 100 millionaires.
That's
Mhm.
not a bad. That's not a bad
Not a bad
ratio.
list.
So, but the thing is, congratulations to Jay-Z, but we need more billionaires.
Mhm.
That's my whole point.
Absolutely.
Yeah.
16 billionaires out. I believe there's 1,400 billionaires
100, yeah.
in the
Yeah.
world. So
Yeah.
14 billionaires out of 1,400 is unproportional. That's unproportional.
I think
And then when you look at the amount of money, like when we was talking to Timberland, he was like, to me, Jay-Z's worth 60 billion. Like the amount of excellence that he had to do to accomplish to
And
get
value that he brought, yeah.
when you had this dude that was running this crypto thing and he was worth 10 billion and
Quick.
nobody even knew who he was. So
Yeah.
it's like, we got to like, it's like, look at Diddy. Look how much Diddy had to become the top person in 3 different, you know how almost impossible that is?
Possibly, yeah. Kanye too.
Yeah, Kanye. Diddy,
Yeah.
to me, he's one of the best people has ever done it. He was the top person in music. Then he took over spirits. Then he took over media. That's almost impossible to do.
And he's a top party promoter, like at what, 19,
don't forget that part.
20? Like,
To get to a billion.
Yeah.
Like he told me, like, you know, his goal is not to become the richest. He wants to make impact. But I'm just saying, I'm just using that as an example. Like, look how exceptional we got to do just to get that Billy.
Mhm.
There's plenty of white people that are worth $20 billion that you never, what Jay said, a bunch of dudes you never heard of.
Yeah.
They got me.
It's billionaire boys,
heard,
dudes you
know,
never heard of.
a bunch of dudes you never heard of.
Mhm.
Mike Novogratz. A lot of people never knew who he was until he came on Market Mondays. He's worth $8 billion.
Mhm.
yeah.
Nobody, they didn't, like, a lot of people that watch this program never knew who Mike Novogratz was. He's worth $8 billion with 20,000 Instagram followers on the low.
Yeah.
Kathy, Dan Cathy.
What?
Dan
yeah,
Cathy
yeah,
worth
yeah.
$6 billion.
And they walk past them.
Nobody knows.
You walk past them.
Our billionaires are like, they know, but
We
that's
know.
why we got to talk about Robert Smith. We got to
Yeah.
talk about Dan, like we got to talk about these type of people because they was able to do it without becoming celebrities. That's even harder.
But there's also a part of it is like, and we had this conversation, I've had this too, is like having grace for them in this moment. Because out of the 16 that we just listed, how many of them are first generation?
All of them.
It's a great
Pretty
point.
much.
Yeah, all of them.
Pretty much.
Yeah.
All so,
So I think
so
Aliko didn't go to
his grandfather,
they
his
had money. I don't
it was,
think they was billionaires, but they
but
had
they were
money.
right.
Yeah,
They
but
it,
He comes from
Yeah.
money.
he comes from a generation. His grandfather was a farmer, so it was passed down to him. But even if that's 1 out of the 15 that are billionaires, and again, his grandfather wasn't a billionaire, but like, yo,
Mhm.
this is first generation for most of them.
Yeah. Michael
so
Lucia,
this-
definitely. Yeah.
This is another thing that Puff was sharing, was like, yo, he's learning in this space because the higher he goes, there's less people he sees. Who is his contemporary, right? Like can he just keep calling Jay? Like, who are the people that he's supposed to rely on? So he's figuring things out, and I'm sure all of them are figuring things out. Even Tyler Perry figured things out at this level. Yeah, he can lean on Oprah, but who does Oprah lean on? You know what I'm saying? Like,
Great question.
we
Yeah.
really got to give them grace because they're doing it right now. And yeah, we're watching some of the steps, and I'm sure there's going to be more billionaires at a birth, but we got to kind of have grace for them. I think that part gets left out of the conversation because, yeah, they are the first to do it. But is it generational yet? Right? Like, do we know what their kids are going to do? We don't. Right? So it's one of those things. It's like, yo, this is like something that we really have to monitor. Like, what happens to the next generation? What happens to their kids' kids? So we kind of got to just be cautious of that. And like I said, give them grace in these times as they're learning through this experience, because there is no script for it. For us, this isn't the Walton family, right? This isn't the Hilton family where it's just been passed down and passed down and passed down. We are creating those names now. So let's see where we go with them.
Yep. That's true. Very
But
much
dropped
true.
the bomb with the sermon.
With the who?
I said my boy dropped a bomb with the sermon. Closing
Oh.
statements. What's up? Yeah.
Yeah,
I ain't even had nothing to follow up with. That was
That
incredible.
Billy, that
Nah,
Billy,
it's real. It's real.
that Billy talk is different, man. You know, that Billy talk is different. That Billy talk is different. But I was just thinking, like, it's just crazy. Like I said, it's pretty dope that we've been able to establish those relationships with those people. But it just goes to show you how small the world is, right? Like once you get in the circle,
Certain rooms, yeah.
yeah, it's like,
Here's the best part, though. When we get in the rooms, we're bringing people with us, right? Like, there was no place for them to speak. And now a community of people can now learn about these people. They can hear about their stories. They can get
Mhm.
inspiration. They can feel inspired. They can feel like, oh, I can do it. Now I have the blueprint. I
Yeah.
think that
Yeah.
that's the, I mean, it's not really even about us. It's about us. Like,
That
what do we
Billy-
take from this?
I
Speaking
touched
of right
that
rooms to
Billy.
be in, this week, Toronto.
Yeah,
Canada.
yeah.
Toronto, Canada, man.
Yes.
This week, sold out shows. Sunday and Monday. We're gonna put on a hell of a performance. 19 keys. It's gonna be different shows each day, different shows.
Yeah.
Got some surprises. You know how we do. It's gonna be a vibe, and just to bring that level of inspiration, motivation to Toronto, because I feel like it's like a London situation where, you know, sometimes you just need to see that representation. And like when we
Mhm.
first went to London, we didn't really know how big, how big it actually was until we saw the 3,000 people on the street in front of tape. And it was just so refreshing to see, because it's like, this is something that they're looking at, even though it's different country, different laws, different things of that nature, but the message is still understandable from people that look like them. So when
Yeah.
you go to Toronto, of course you got a lot of people that have immigrated from Jamaica, from West Africa, East Africa, Barbados,
Oh, yeah.
Trinidad,
Okay, yep.
all of that. Like, you know what I
Mhm.
mean? So it's like, they first generation, second generation, they're trying to figure it out. They're trying to make the most of it, but ultimately it's no different from America, where the system is not made for them. The system is made for people that don't look like them. So we are familiar with that because the system in America wasn't made for us, but we made the most of it. And now the underdogs is on top. So now we got to spread that message to everybody all over the world. So when we go to these different places, it's so familiar. Like it might be a couple different, differences as far as how we talk, how we dress, how we that, but ultimately we all the same. So I look forward to connecting with the
Yeah.
good people in Toronto, Canada. It's going to be an amazing experience. I already know. And
Mhm.
it's up. It's
Yeah,
really up.
it's gonna be amazing. And I gotta ask you guys a question. Does 2023 feel like that 2015, 2016 crypto run where like something was bubbling, you don't know what it's gonna be yet, but it feels like the people who take advantage of like these next 2 years are gonna be the ones who are like doing incredibly well like 5, 6 years from now?
I said that to a couple people actually.
I didn't tap your phone, I promise.
Yeah, no, I said that to Don Peoples briefly, and I was just like, if we don't really get this grasp what's happening right now and really
Mhm.
utilize this time and really execute on the information, it's going to be detrimental.
Yeah.
Like, because you
The
can
gap's
see,
gonna be
right?
so
Because
wide.
the gap's going to be, because there are people that are actually taking it, and I know, our community thinks it's just us, but like the world is watching what we're doing,
Mhm.
really, right? And so they're getting the information too, right? Because it's for everybody, and they're executing on it. And if we really just take this moment for granted, if we mismanage it and misuse it, I don't know. I don't know how far it sets us back. I already know we're so far set back already.
Yeah.
So to not utilize, especially when there's an economic reset like we had with the pandemic, what do we do now? Is like the question, man. I don't know how many generations we get put back if we don't.
Yeah.
I would say the next 2 to 5 years if we don't capitalize.
Yeah. It's really interesting just to see. Even for the fans watching, like I wish we all had a chance to like talk more, but even like Trevor shouted out, like we planned what we was gonna do in Toronto when we had met in New York. That was great to have this like we haven't had one since everyone's head down grinding. It feels like 2015, 2016 all over again. It's like you got everyone listening, please just lock in, study every market, Forex, crypto, derivatives. He told you the information on swaps. That's never talked about with a retail audience. So any edge that you can get there, even if you can just see the data, even if you can see that the interest in a bank collapsing, you on the swap side, you may be able to short it and take advantage of it. Come to the shows, find some information. Like even what David Gross said about what could fall apart, that tied with what people said in New York. The writing is pretty much on the wall. So for those of you that are super serious about trading and investing, lock in even more. I know I am.
The last thing I'll say is value your relationships and honor your relationships, because you never know. Some things you just really can't even quantify with money. I was talking 19 keys, and he was saying like you know, what is like, all right, if you try to value our relationship with 19 Keys, you might be able to kind of value it to say, okay, this is worth this much based off of X, Y, and Z. But what does the next 10 years look like? Like if we stop talking today, what's the lost opportunity on the next 10 years? You don't even know, right? The relationship, part of the relationship is what already has happened, but a bigger part is what could happen. So, you know, I feel like that's something that people really need to understand. And even for InvestFest is coming. We're gonna be announcing that, and Ian, we're gonna be working with something special. I got something special that we're working on. We haven't even told you about this yet, but a relationship. Relationships. It's relationship. It's all relationship based.
Wait, hold on. Time drop. It's better than the thing we talked about in LA.
Nah, something new.
It's called Go Big or Go Bigger.
Or go home.
No, go big. We never go home.
The other thing was fire.
No, we never go home. We never go home. We just
the
go
other
big.
thing was fire though. Okay.
We'll talk after this, man. But you know, that's the power of relationships. So sometimes just being in the right room, meeting the right person. This Don Peoples thing, it all came back to us interviewing him at an event. The event probably had 100 people there in New York, and it was a very small event. And we interviewed him. At the time, I don't even think he actually fully knew who we were. We interviewed him, and then we put the interview on as a podcast episode, and that goes viral. And then obviously he's an intelligent person. He understands the power of that. And that just leads to everything, right? And it's like that, just being in front of him for 45 minutes, getting to ask him questions, opened the door. Who knows what that could potentially lead to? I don't know what it could lead to. It could lead to
Freedom World Tower 2.
It could very well lead to that. Like, you know what I mean? So sometimes like being on a stage with a person, sharing a moment with a person, sharing a panel with a person, that's an opportunity that you might not necessarily have outside of that. And then once you're given that opportunity, it's up to you to maximize that opportunity. And who knows how far it can go. So yeah.
And can we talk about the importance of preparation, of not missing when you get the shot? Like even when we was at Troy's birthday dinner, it's like, hey man, you gonna hang out? I'm like, I'm going back to the room to prepare. Like I do not take being on that stage for granted. Because I will never have a square moment on stage. Like I pride myself on every show putting on a great performance. But can you talk about getting the opportunity is one thing, but then delivering and over delivering is another that allows you your next at bat.
Well, definitely for sure. So even Jadakiss, the episode that comes out tomorrow, and we asked him like about the verses, and you know, I had heard from a source that one of the things that nobody talks about is that they said Dipset's rehearsal, and shout out to Dipset, was just with Jimmy. They said Dipset's rehearsal was like 10 minutes. And they said the Locks rehearsal was 3 hours a day before. And he said, nah, it wasn't 3 hours. It was 3 weeks. He said, we was rehearsing for 3 weeks. He was like, I was asking people like, yo, what song you think they're going to play? And then he was like, he had in his brain, he already had every response. So when people see his performance, they just look at it like, damn, like he's one of the nicest of all time. Now that's 3 weeks of, so when he's able to recite those lyrics and not have to hear it, that's because he's actually rehearsed them. Like, you know, it's not easy just to recite a freestyle from 25 years ago. That's not easy to do. So it's like, that's because he's rehearsing them for a month and he's already anticipating what Dipset's going to say. So by the time he gets on stage, he's able to have a performance like that. That's all people see is that performance. They don't see what went into the performance.
Yeah. But it goes back into the conversation of relationships. The other part was that he was like, yo, you know why I prepared like that? Because Puff used to make us prepare like that.
That's a fact.
You see what I'm saying? And all those times they was like, yo, man, like, yo, we got to do this again. We got to do this again. It prepared him for perhaps his biggest moment of his career. That, you know, something that he's going to be remembered for. It was because in 97, 96, 95, when they were the guys that nobody knew, he didn't care. If you're on the label, you're going to prepare like this because this is the level of excellence and the standard that everybody's going to have if they're going to be with this label. 25 years later, it's still ingrained in him to prepare like that for an event. And so this is the outcome of it. So that relationship with Puff is evident. And even Puff came to some of their rehearsals like, nah, y'all gotta freak it like this. So
Nah,
yeah,
Diddy,
man.
nah, that's true. And that goes back to the shout out to Diddy, but that goes back to like even things that I learned in basketball, I still carry. It's good to develop good habits early.
Yeah.
Very, very important. It's hard to break bad habits. So when you're teaching yourself or you're teaching your children or you're teaching young people, try to instill good habits in them early. And people can say whatever they want about Puff, but he was like, they was disciplined. The Bad Boy tour, all of that, like he taught them discipline. He taught them how to rehearse, and they never forgot that. They haven't been on Bad Boy in over 20 something years, but they still, those lessons that they learned when they was 19 years old on Bad Boy, underneath Big, underneath, you know, all of them, that helped them.
Yeah.
And it's like, just think about that. Like
Treating
something
it like a job. Yeah.
it took 20 years for Kiss to fully get his full recognition. It took 20 years for him to get like patience. There's a lot of different lessons in that. Patience, discipline, camaraderie. The Lox never broke up. Staying together, like being able to, you know, put your ego aside.
Okay.
Chic, understanding that he's not Jadakiss. Styles even understanding that he's not, and that's okay. There's only one Jadakiss, but that doesn't mean that you're not valuable.
Yeah.
Doesn't mean you're not valuable, but don't try to take this in this moment, the superstar needs to perform.
Two is better than one. It's three of the Lox.
Yeah.
Shout out to the Lox.
Yeah.
Oh, I can go.
Speaking of which, tune into the interview with him tomorrow. And even work ethic, like Jada, one of the cooking with the coffee thing. Like I'm seeing him make his round on what Kelly Clarkson album. Like
that's part of the combo. That's part of the combo. That's definitely part of the combo. And I don't. I'm gonna say this, man. I don't want y'all to discount the level of genius that we have, and you're gonna be witness to in Ryan Leslie. I think he's underrated. He's underappreciated, but this is one of the smartest gentlemen that we've ever met. I've ever met for sure. And he comes from hip hop culture. This dude he's next level, man. Like when you think he doesn't know something, trust me, he's been studying everything. Like he knows everything about Earn Your Leisure. I'm sure he knows everything about you, Ian. He studies the landscape to see how he can improve it and how he can be better than it. And so
he just found out about
me too. That's why I just said his name.
Well, listen, he sent an email off last night about some of the companies and he was invested.
And so like he just texted me, but he texted me last night too. And I had to stop and thank him because anytime he thinks of investments, he could keep it to himself. He's at that level where he could just keep it to himself and be very selfish about it. But he always reaches out to us to see if we're interested. There's never a time he doesn't say like, yo, are y'all interested? If not, let me know. If you are, let's get on a Zoom call so I can explain it to you in detail. And he's done that numerous times, man. This dude is incredible. I want to make sure we give him his flowers.
He went to Harvard when he was 14 years old.
Yeah, literal genius.
Like that's crazy.
Yeah, we're not.
And one of the earliest Apple retail investors and made a bag. I won't tell his business. I know y'all covered it, but made a bag off investing in Apple and Bitcoin.
We spoke about that at InvestFest. The first InvestFest, he talked about he invested in Bitcoin and he invested in Apple early. So him and Hill Harper was on a panel at the first InvestFest. But before we go, I know we talked about the Lox, but it is the 20th. 2 days ago was the 20th anniversary of Diplomatic Immunity, one of my favorite albums of all time. Shout out to Cam, shout out to Freaky Zeke, shout out to Joel Santana, and shout out to our guy Jim Jones.
Yes.
Classic moment.
J.R. Ryder,
Uncasa, all those guys. I'm just saying like the core element.
Yeah.
So, man, Dipset, everybody knows how I feel about Dipset. The most influential rap group ever. Style.
Arguably.
Hold on.
You just can't.
I'm gonna do how you do on my TikTok.
Like you just can't make a definitive statement. Like, arguably.
Wait, what?
Influential. I ain't saying the best. I said influential.
And I said arguably.
All right.
Yeah. We ain't gonna step on your moment though. Go ahead.
But you know, them dudes, man, really, that was the soundtrack to my life during that time. So it's crazy that 20 years flew by that fast. Who knew?
Yeah.
I was in IMG Academy in Florida when that came out. Legendary time, man.
I was at IU,
yeah.
2003. What a time. What a time to be alive. That's when you had the 5X t-shirts and throwback jerseys and Pele.
You might have had a sidekick. We had a trio.
Pepe jeans.
Yeah.
That was
Mhm.
a time,
That's
time to be had
That's when I was like, yo, text messaging gonna change it. And he was like, no, I'm still calling people.
before social media, before Facebook.
That's a fact.
Boy,
Yeah, man.
Been real.
Before we go, I want to send love to Haiti. All my Haitian massive. A
yes.
lot of turmoil going on in the country right now. I know they just put out a warning for all Americans that are in the country to exit the country. So prayers up for Haiti. And prayers up. I know there was another school shooting today, man. It just seems to never end with this. So prayers up to all the families that were affected. I know 3 adults and 3 students, which is just insane to me. So prayers up, man. Let's do more. Let's love each other. Let's share with each other. And let's build with each other, man. We gotta figure this out.
Yeah.
Yeah.
All right, ladies and gentlemen.
Love y'all. Toronto, see y'all this week. No stock club call this week. I'm prepared for Toronto. We'll be back on next week. Shot. It's a shame how it wraps up bananas.
Hey, look. Hey, what camera? Listen, I still love Beyonce, y'all. There's no shame.
Oh,
I just want to let everybody, because I got a lot of B's in my DM. Bonus round. I love Beyonce. We'll talk about that next time. I want y'all to be good, be safe, travel mercies. Houston, we on the way. Love is love. Toronto.
Yeah.
Yo, some ackee and saltfish for me, please.
Love.
Love.
Love.